Yeah, good morning, all of you. I hope you guys are able to hear me and are able to see me. Can anybody please confirm in the chat box? This is C. Abhishek Bhavsar. I'll be the host for day one of this masterclass. Can anybody please confirm in the chat box? There's a chat box also. Thank you, Sri Ram. Thank you, Rahul ji. Thank you for confirming it. I hope as it's a Zoom platform, so everything would go fine, right? So this is C. Abhishek. The I'll describe about myself. I'll go out. We are going to have this entire 2 day session. Today I have kept it free because I want more and more people to join this session. It's not about me taking the payment and conducting the sessions, but if you are a chartered accountant, and I presume you are a chartered accountant, or probably you are learning CA studies, or you're into CA finals. But for you now, it is more important to learn transfer pricing. Why? Because now the entire things have changed, right? In the practice market, now you are required to also give value added services to your client. And that is where you would require a skill set to understand transfer pricing opportunities in your client and how you render the TP services, right? That is the basic fundamental of this session. Right, I understand that I am audible. So now I'll will not waste much more time. I was just waiting for others to join. I mean, that depends on seriousness. If they think that TP is important, they'll join themselves. But now we have waited for 10 minutes. Now we'll start with the session, right? I'll just share my presentation. Just give me 1 minute. Yeah. Yeah. Can anybody please confirm if you are able to see the presentation? Thank you, Rahulji. Thank you, Sriram, sorry. Now, before we start, like let us do 1 2 exercises. Obviously we are going to understand transfer pricing. It's a 3 hour 2 day session, but don't think that we're going to be very theoretical on this part. It's entirely practical thing. It's a very much discussion led session. So I'll be keeping asking. It will be much more interactive thing. Like I'll keep on asking you the questions. You'll have to answer certain things so that we learn together and you understand the base fundamental of transfer pricing, considering the part that this is a part of international tax practice, right? So in most of jurisdictions, like the law or the provisions or the fundamental or foundation provisions will always remain same. So that is what our agenda is for day one. So if you can see, we have written here, it's about foundation and opportunity identification. Obviously tomorrow we'll also go into much more detail, case studies, methods, etc. But today we'll learn that how how TP has come into picture, and how the entire practice goes on. Like I have been in myself into now I have stopped counted, but like 9 to 10 years in transfer pricing. At an average, I've handled more than 400 500 TP reports. Like that is how I have been into this particular area of practice. Last year only we our firm did around 85 reports India and UAE. So you can understand that for the 10 years, if I total it out, how much type of scenarios I would have faced in transfer pricing. So my entire intention in this 2 days is to impart the entire transfer pricing knowledge which I have in a very basic, very simple sense to you guys, because now the time has come. As you know, AI is going to take over certain processes. There are going to certain automations. In TP also we do certain automations. So now we need to understand that if you don't get into the area of practice which can actually provide value to the client, probably you may be behind the entire, you may get success late, or you may be left behind the entire race, in the entire race, right? So we are going to learn that today, right? But before we start, as I mentioned that we do 1 2 activities, I just want you to, I know it's a Saturday morning. I mean, people do have weekends off also. Like in our office, we have weekends off, and that is where I'm taking this session in on Saturday, Sunday. But yeah, I just want to know that from which city you have logged in. What is the location, your name? You can mention your name and city from where you have logged in, so that I can do a shout out for the same. Okay, Sriram is from Chennai. He's the most. I mean, your responses will come to me only. Yeah. From which city you have logged in? Rahul ji is from Delhi. Good, Rahul ji. I think others are on the way or sleeping or something like that. Sonal is from Delhi. Thank you, Sonal. Welcome. Mohit is from Amritsar. Okay, so Delhi, Amritsar, Mumbai, Chennai. So at least western part, northern part. Sahil is from Sahil. You have not mentioned. CA Sahil Sood from Ambala. Oh my God, that's very awesome. Like so we have reached somewhere, right? In India, I mean, we have reached on many parts of India. So from west, I am there. All right. So I have joined this, and obviously Pragya is also there from Mumbai. So thank you, Pragya, Mohit, and Rahul, Sonal, for response, Sriram, and all. Thank you for this attending this session. Now we'll start with the deck, right? I hope I am clearly audible. You are able to see the deck. There are no tech issues. I think I mean, you should have that Zoom app to see this properly, or you can obviously, you can also see this entire presentation through browser as well. As I mentioned that today we don't want to get into theoretical part. We are just going to discuss as, some friends who are sitting and discussing on technical topic, your CA friends, right? So we are going to do the same thing only. It's don't take any pain to remember anything. Obviously, everything is available on ChatGPT, Perplexity, and Claude. Now I don't use Google, right? So that is how we do. Right. So now we'll go to the next slide. But before we start, obviously, this is a 3 hour session. I mean, we'll try to close this by in within 2 hours, 30 minutes, or probably by 3 hours. But have a water bottle with you. It's summertime. Take regular sips. If you empty your cup, basically, it's not the cup method, but whatever you have in your mind about transfer pricing, I'm sure this session we have kept for beginners who want to learn transfer pricing from foundational part, from practical part, not for the ones who already know the transfer pricing. I mean, obviously, if you know transfer pricing, then there is no meaning to attend this session because you'll be able to relate many things in your practice which you are doing. But still, if you want to understand how the entire transfer pricing practice gets run in India or UAE, that is what I am trying to going. That is what I am going to try to explain today. Apart from foundation, how transfer pricing law is to be read, how transfer pricing law is structured, right? And then we'll also go to technicalities on day two, right? So if you have joined for day one, free of cost, I've kept, free of cost for day one. If you want to join for day two, obviously you can again, register on the link, which I'll be sharing, afterwards at the end, right? So if you like day one, you can join for day two by registering yourself as well, right? So empty your cup, whatever thoughts you have on transfer pricing, whatever prejudices you have on transfer pricing, just empty that, just don't, just ignore that while we are learning on this, while we are learning in this session. I'm sorry, I'm just, fumbling. Somewhere I have some throat infection, so that is where I'm not able to speak very clearly on this part, but yeah. Then let's learn from foundation. Then take notes, screenshots, ask questions under the Q&A section. So there's a Q&A section also. I'm sure you guys would be able to see Q&A section. You can ask questions, in Q&A section. And I would recommend that you put down any questions which you have in transfer pricing in Q&A so that I can take it up one by one, right? Don't put any questions on the chat box. Let us use the Q&A section, which already Zoom is providing us, so that I can answer all of your questions, right? No recordings would be available at least for 1 2 months. As we are running this entire series till June, the recordings won't be available, but you have been already added into the WhatsApp group, right? So if you have joined that WhatsApp group, then obviously I'll be posting the link also, as and when the next session comes up. If you have registered and if you have, registered for the masterclass, and as I mentioned, that our intention is not to earn money from this, sessions, but our intention is that you should learn, right? So when you are live with me, you will be able to learn well, right? If I give you an offline recording, it's no point. Like, you might get, it will be so boring in the era of reels where we get bored in 60 seconds. I mean, if I give you a video of 2 hours, I'm damn sure that you are not going to learn that in a single day. So attend the live session, right? And enjoy the learning process. We have to be very easy, chilled out. Myself personally, I believe that we have to clear the foundations first in a cool, calm mode. So in case if you're sitting in some chaos place, I would just request one thing, that you can, shift yourself to a very silent place where you can, understand. We can do chatting. You can, I can also unmute you at times when I ask questions. If you want me to unmute you, I can obviously unmute you as also, and we can discuss on the case. So we have to keep this entire thing interactive. All right. Everybody are there? Can somebody confirm? Yes, no. I hope you guys are listening to this and I am audible. Well, all right. So, before again we start, as I mentioned, that let me also introduce myself. Obviously, you might have seen me on the registration page, on our Indie Fintech's registration page. In case if you have, if you have registered through our website, or probably let me just introduce myself and let me tell you my story. So that you at least get a trust that whatever transfer pricing that you are going to learn, you are not going to learn from a very amateur or a beginner guy. I have been as I mentioned that I have been into transfer pricing for more than 10 years. But I personally feel that it is important for, if you are younger than me and if you are new to this practice, I would always like to tell you certain points as a senior part or as a parallel professional. I want to also describe about myself. So who am I? I'm based out of Ahmedabad. My name is Abhishek Bhavsar. I am a chartered accountant. On in 2012, I passed out my CA. I got a job in beginning of 2013, and then after I shifted to Pune, where for one year I was with a audit division in a Pune based CA firm. It is a mid-size CA firm where I was into audit part. And obviously, audit was not my passion. Somehow I found it that audit was not my passion. So I left my job, and internally I knew that I was a very businessman type guy. I didn't wanted to do job every time or entire during life. We don't want to be dependent on someone like for job. Right? We all want to be independent at a point. So that is where I also thought the same. But when I left my job in 2014, that within 1 year, I realized that I didn't had any skill set. Right, because if you are into a practice market, you are required to have a specific skill set. So that's where that can give you an edge to grow your practice. But somehow in 2014, within 2 months, I realized that I don't have any unique skill set. And with that less exposure of 1 year, I again shifted back to Pune. I I worked with Sudit K. Parekh, which was again a top 10 TP, which was one of the top 10 TP firm at that point of time. Now we have many more firms in India, but still Sudit K. Parekh, Nexim team, they are good in transfer pricing. So I was working with them for a year, and then after within 1 year, I was selected in EY Bangalore in one shot interview. Even I didn't had any partner round also. I mean, no references, no links, no partner round. One shot interview. I was selected in EY Bangalore team transfer pricing, where we used to handle India practice, where I also learned about giving advisory to clients, doing the compliances, TP reports, etc. For India and also for other Singapore and such jurisdictions. And also I was active on litigations, and also I have worked on certain APAs when I was in EY. So again, in 2018, I left Bangalore. As I mentioned that, there was this particular, you can say, I wanted to, do business, didn't wanted to be dependent on anybody else for my income. And I wanted to become an independent. So that's where I left EY. So I thought that now I have skill set. Now let me come in back to Ahmedabad, which is my hometown, and let me start the practice. So in 2019, I started my practice, but yeah, it failed in 6 to 9 months. I had to take back the job again, because now this is where it becomes very important for the young people. See, knowing the things is good. Like, you should be expert, not expert, at least you should know how to crack the things. I also don't consider myself as an expert when it comes to transfer pricing. I keep on learning the things, right? But now the point is that unless you don't have a marketing skill sets or marketing strategy or business development strategy, your practices will fail. So I realized, so my practice when I wanted to start in 2019, I had the skill set which I didn't had in 2014, right? But still, for this particular things to start the practice to position the entire services, I didn't have the marketing strategy skill set. Nobody was me there to guide. There were much more CA restrictions on the CA firms at that point of time. So I had to again leave the entire practice in 6 months. There was zero revenue. And then I went to the job again. Again, I was working with a 18 years Deloitte experience partner, not in Deloitte, but obviously legacy based CA firm in Ahmedabad. I thought that let me take 3 years of more experience. I thought that practice was not for me. I thought in 2019 about this thing, right? But in 2022, one thing happened. Like, somewhere I realized that, okay, because fundamentally the nature was to become a businessman, like, to do the business, to do the practice independently. So that is where something, I didn't like anybody else instructing me on certain things, right? Nobody likes that, right? After having the experience. And, you also feel that the package is low, etc. Whatever, the things are there. So that is where I left that particular firm without taking my bonus also around 5 to 6 lakhs. And I left that firm and I started my own practice in 2023. I had my own office. I had invested in an office. So in 2023, I started my own transfer pricing practice. focused thing, marketing thing. And this is 2025 we are closing, 2026 March we are closing, and we have closed at around 50 lakhs revenue with a team of two chartered accountants and two interns in my firm. So that is what my story is. Within 3 years, we scaled from zero to 50 lakhs. When I started my practice, obviously it was a zero revenue. In the first year, we built around 5 lakhs. I'm not mentioned here, but in the first year, the revenue was 6 lakh from transfer pricing. In the second year, it went to 16 lakhs. And last year, when UAE came up, the entire thing shoot up to 50 lakhs plus revenue. This is my humble story. I hope this technically tells you or guides you that how you should, aim for your practice to scale up in 2026 and 2027. Right. Interesting. We'll go to next slide. Now, as I mentioned that, before starting this session, let me make you more comfortable that what perspective you should have when you are going to start your own practice in transfer pricing, or probably when you are going to learn transfer pricing. If you don't know how to sell any services, you won't be able to earn from your skill set, right? You should know how to sell your skill sets, right? So I have this three most important principle of sales, and the fourth one I have added just to make sure that, it's not a sales principle, but it's a very basic fundamental business principle. What are the three first principles of sale? I'm not saying that by believing you are a champion, you will become a champion. But by not believing itself, you definitely won't be the same. You have to consider that you are a champion and you have to work accordingly only. Don't get negative when anything comes up. When someone asks you on transfer pricing and you are not able to speak, don't consider that. You have transfer pricing support. Your friends might be there. We are there, but gather them. I mean, it's not only the big four who owns the market. There are many, many mid-sized firms, of tier three firms, and also obviously big four who are catering services, who are rendering services to the entire market. So, it's not only they are champion or someone else is champion. You can be also a champion, right? Believe in yourself. Positive thinking may not assure success always, but thinking negatively will guarantee a failure, right? We are all here to learn the things like positively. We don't need to be negative on many things like, this cannot be happen, this shall not happen. I have seen many cases in transfer pricing where the most difficult cases also we are able to solve that, right? With only the positive attitude. If you are being negative that, okay, this there is some point which is not coming under the arm's length criteria, and we then have to tell to the client to do the adjustment. No, we have to find out the way so that we can add value to what client is saying, right? Not everywhere, every time we find out the ways, but at least we have to help the client, right, in a positive manner, so that at least we are able to justify what transactions, what the client is taking. All right. And this is the most important for educating yourself. Rain will fill the size of vessel you have. Now, if you have a cup, and if there's a rain, you will be only able to fill that particular mug or cup, right? But if you have a big vessel with you, you'll be able to fill most of the things. You'll be able to benefit more. So this entire session I have kept as a very knowledgeable, sort of thing, so that whatever is on you, like, as I mentioned, that it is on you how you take the entire session, right? It's not on me. I know transfer pricing, but I'm trying to make you learn so that you can understand how the entire market is working. We are going to discuss, fully marketing thing only, right? How you pose yourself as a transfer pricing professional into the market. What are the obviously we are going to learn the foundations as well. I mean, it's not only the marketing session, but yeah, basis, my experience. I'll be free to share whatever. In case if you have any questions, you can ask in the Q&A box, right? And the most important part of business or principle of business is that execution is greater than policy. You have to understand one thing. You have to start working on this particular area so that only you will be able to get the engagements. I work with chartered accountants who don't have any knowledge on transfer pricing. Still, they are able to fetch that work from the market, and then they are allotting the work to us, obviously as a backend. And we don't have intention also. If they also do tomorrow, they bring some TP guy in their firm. We are happy to we are happy for that as well, because at least we have tried to help you to grow your practice, right? But execution is greater than policy. If you just waste your time in learning and not executing the things or not promoting the things, you are not going to do this practice, right? So I think these are the three main important principles of sales, right? Now we will start with certain technical part. I hope I'm clear till now. Are you guys finding it more interesting right now? Yes or no in the comment box, please. Thank you, Sriram, for confirming. I think others, yes, thank you, Lalit. Thank you for confirming, right? And please be interactive. If you have any doubts, as I mentioned, please do put your doubts in Q&A section, right? We are going to learn this entire practice in a very easy manner. I'm dead sure that, I won't, it will be all interesting. Only the thing is that you have to focus on this entire session, right? It will be very, very much interesting. You'll be able to at least learn how to, understand transfer pricing provisions, because technically what we are doing today is foundations, right? And tomorrow we'll be discussing the case studies and method. Now I'll tell you, when we start when we want to start, just a second. Yeah. Just a second. Yeah. So I'll tell you. So when we want to start any practice, first we need to understand the market, right? Now, if you see here, why transfer pricing matters right now, right? We need to understand market first, and then we enter into the technical part. The regulatory and revenue case for Action 2026, right? If you see here, transfer pricing is now getting importance. You might be hearing many firms doing transfer pricing. Either they are themselves, they do have the capability to do the transfer pricing projects, or they outsource to some back-end transfer pricing firms like us, right? So why transfer pricing matters now? Because there are much more revenue opportunities which has come in transfer pricing also. If you see here the statistics about the India part, more than 1,000 APAs have been signed till date, which is the maximum number any jurisdiction has done. What is APA? We are going to learn APA also tomorrow, and today also, I'll give certain knowledge on APA. APA is basically advanced pricing agreement, which your taxpayer, that is your taxpayer client, will have to, may do with the government authorities to settle the transfer pricing positions. Now, can anybody tell me, if you know, can anybody tell me that what is the revenue opportunity when it comes to APA? What big four or mid-size firm only do the APAs? Obviously, we also, we are going to start in UAE, not in India this year. But yeah, what is the revenue proposition? How much you can charge for APA? If you can think, like it's an agreement which you have to execute, which you have to help your client executing with the government of India, that is CBDT. That's where you can ascertain the positions with them so that no litigations in future may happen. Already, obviously, I can tell you that the companies who have a scale of more than 50, 60, 70 crores or 100 crores can go into the APA part, right? Now, can you tell me that what could be the fees the consulting firms would be charging for an APA? So Sriram says 10 lakhs. Okay, we have one answer of 10 lakhs. Sonal says 5 to 6 lakhs. Okay. Any other 15 lakh? Okay, Lalitji says 15 lakh. No. Any other guesses? There are many people. 5 to 6 lakh, Rahulji says. Okay. Any other, participants wants to answer, or should I answer? The APA fees in India, when I have handled also APAs when I was in EY. Obviously, I won't tell you the EY number. That will be obviously more. But yeah, if you see here, the APA fees starts from 25 to 30 lakhs per client in India for normal mid-size firm. Now, if you are in a big four, or big fours do charge around 30, 35, 40 lakhs, right? So that's a APA thing, right? So it doesn't comes in every client, but obviously for few clients who have more than 100 crore value transactions, and they are present in India. Like, there are many clients who have more than 100 crore international transactions where APAs have been signed. This all APAs. Now, if you can understand 1,000 APAs have been signed in India, then you can understand that what India has capability. How much people would have earned from it, right? So normally 30, 35, 40 lakhs is the range in India when you do APAs, right? It's a 2 year process. So that is where also it involves much more efforts. You have to you have to do submissions and everything. But 40 lakhs is also a handsome fee. Like, in 2 years, if you are able to earn 40 lakhs in one APA also, आपका आधा शायद practice पूरा का पूरा, आधे का आधा practice निकल जाएगा इसके अंदर, right? So that is how the APAs are there. If you don't, so why transfer pricing matters? Now I'm sure you guys are able to understand that why I'm trying to, tell that this could be now next area of line. APAs have started in UAE also, right? And that is where now, obviously, the filings, we are not sure how the filings are going, because for domestic transaction, people have started filing the APAs. But still, again, on the same lines, if you go to UAE also, people would be able to charge around, in INR terms, could be 25 to 30 lakhs over there also, if not 1 crore, right? At times, you may charge that also, depending on the clients and transactions, right? So that is the potential of signing one APA. So whatever I have said, the fees is for one APA, right? You have multiple clients. If you have 2, 3 clients for whom you have applied APA, Probably your yearly revenue can go beyond, 50, 60, 70 lakhs, right? It depends. All right. Then 2% penalty is on transaction value. If you don't report the transaction in your form number 3CB, then there is also a penalty of you don't maintain transfer pricing report. There's a 2% on the transaction. So if you say, for example, if your client is taking a transaction of around 2 crores, on that straight away, 2% penalty would be there if he is not, if the client has not maintained TP report, right? What is 2% of 2 crores? 4 lakhs. And in your transfer pricing report, the report, so can anybody tell me that at what price, transfer pricing reports are being sold? Like if you want to work on a very simple transfer pricing assignment where you have to prepare TP report, how much fees you can, take from the client, and compare that with the return of income which you file for the client, right? So Sriram says 1.5 lakhs. No, I mean, obviously you can go for 1.5 lakhs. That depends on complexities. But Sonal says 30,000. Yes, 30,000 से start होता है. Like, if you, I mean, I'll tell you about ours because, we are also a firm. So what we charge is that we start charging from 30, 35,000 on B2B basis. I have seen people charging 50, 60, 70,000 for 1 year to the client for transfer pricing report, right? If you have a European clients, European subsidiary, they can easily pay, and obviously they should have money to pay. Obviously, they should be operational, not into loss, or probably if they are also into loss, but still, they should have the capability to pay you. You have to do that due diligence. But I have seen also people paying 1 lakh fees. So we also do charge to certain European subsidiaries 1 lakh fees as TP report, and our efforts are similar to what we charge for 30, 35,000. That is how the market goes, right? So it's on you how much you can earn. Again, in UAE also, there's a penalty, heavy penalty of 10,000 dirhams. Like it starts from that. Obviously, it can go till 20,000 and then it can go beyond also the same, right? So that is how the things are, in transfer pricing. So you have to be a very smart practitioner, right? It's AI era, basically. Now the entire revolution is coming for AI, right? It was industrial revolution. उसके बाद अभी जाके AI का revolution बहुत बड़ा होने वाला है. So try to identify such areas of practice where you have to put in less efforts, you can earn more money, you can scale the practice. That should be the entire thing, right? In India, obviously, you may have now whatever we speak, we'll speak on the new act, right? I mean, obviously, I have mentioned the sections also, the old ones and the new ones, because for this year, when filing comes, we'll have to use the old sections, right? We'll have to refer the old sections. But from next year, obviously, as you know, income. So already from 1st April, the act has been implemented. That is new Income Tax Act 2025. And that is in force from 1st April. So we'll have to also understand how the sections have been placed into this, right? Now, UAE corporate tax now fully operational. 9% corporate tax is being levied with active TP scrutiny. They are very conscious on transfer pricing. They are being trained by German transfer pricing professionals also. I have heard about UAE tax professionals, I mean, UAE tax officers being trained. Obviously, I mean, in India, Germany, transfer pricing are much more developed compared to other jurisdictions in US. So, that is where these officers are being also trained on that level. So that is where, they are very active on TP scrutinies. Then your client may already have RP transactions. The gap is not opportunity, it's an execution clarity. Basically, the point is that, as I mentioned, that execution is more important than policy. You may not have any direction how to execute it, and that is where you may lose out on opportunity, right? So that could be possible. And form number 48, a very complex form. I mean, I want to make things very simple for you to understand. But form 48 is a very technical form where you have to also mention that, what is the arm's length range, what is your tested parties margin, and how you are able to justify and how you are able to aggregate the transactions. So these are certain technicalities which has come up under form 8. It's a ready to, if you file the form 8, the entire system can understand itself only that, there are transforming risk or not in that entire case. So now the entire most important thing from 1st April 26 would be to align your clients, if they have transfer pricing applicable, to ensure that they are following a proper policy, and to also close on the entire TP positions before filing return of income. So this is about form 48. That is where transfer pricing matters right now. If you don't act, obviously you're going to lose many, many things. I mean, then, you may have to find out other ways to earn the money, if not from this practice, right? So now, India income tax. Now we are going to TP framework, right? What is TP framework? How the TP provisions have been structured, right? Now, Indian Income Tax Act 2025, TP framework, how it is being proposed, or it has been already enacted under 2025 Act, right? So The section names have been changed from 92 to 92F. Now they have, changed the section numbers from 161 to 173. There have been also, bit small changes into this particular provisions also, which were there in the earlier erstwhile act, that is 1961. Now in 2025, they have also bit clarified more. So they have, it is introduced in 13 February, presidential letters and what, I'm not going to this part. But what changed for transfer pricing? I'll be focusing on this part more, right? So now if you see, Form 3CB has been changed to Form 48. 11 clauses, 6 part, and expanded very technically. Like you, as I mentioned, Form 48 is going to be a very game changer for the people, for the taxpayers who have transfer pricing and for the CAs who are signing transfer pricing form, right? Previously, it was only one liner thing that you have to just mention the nature of transaction, value of transaction, and method. That was the only important thing, and along with the remark column, if you want to mention anything else. Now you have to justify that in the TP form itself, so that in case if you're not able to justify, and if you are also not able to document everything, what you are going to sign for your client, then it's a big problem for you, right? You as a professional also, and for clients also, obviously, it is going to be a big problem, right? So what changed for TP? Form 3CB is going to be converted to Form 48, that is reporting. Correct. Form 3CEAA, which is basically a master file. What is master file? Master file, we are going to understand documentation framework in transfer pricing in a technical way. But what is master file? It's a group level document which contains group level economics, group level value chain and other relevant data. Say, for example, intangibles, what intangibles are being owned by the group entities. Group, I mean, let me also tell you what is a group. Group is basically, you can assume, I'll just give you example. Say if there's a Microsoft US and it has a subsidiary, say Microsoft India. Now if you see here, Microsoft group has presence in two countries, say US and India, right? So that Microsoft group is, we can call as an international group. That is, when a group, what is a group? So group is basically a parent entity and a subsidiary entities where the entities ka financials are being consolidated into parent entity. So that becomes the definition of a group. Now, what is international group? When a group has a presence through its subsidiaries or permanent establishment or branches in many countries, it becomes an international group. So for that particular group, at group level, whatever you do reporting, whatever you document at a group level, say intangibles है, ग्रुप के पास क्या intangibles है, इंटरकंपनी क्या सर्विसेज दे रही है एक दूसरे को एंटिटीज, इंटरकंपनी लोन्स कैसे हो रही है, इंटरकंपनी फंडिंग कैसे हो रहा है. So that is all covered under master file. So at a group level, the details are covered. I'll explain more. We do have covered the documentation framework. What is, what generally we do cover in master file. Also one thing, I'm also going to show you also, reports also during this session. So, as and when we come to that particular point, I'm going to show you advisory note or report so that you can understand that practically how we deliver the services to the client, right? Now, Form 3CEAD, which was Form 59, that is CBCR filing, that is, that has been converted to Form 59. We are not going to discuss CBCR much. It is again a group level document where you have to do actually filing of that report with the government authorities, where your parent entity, the group's parent entity or group's headquarter entity, or probably some other entity which is assigned by parent entity, where the filing is to be done. Right, so that is what we call country by country report. It shows the presence. It is only applicable for the international groups which have a console turnover more than 750 million euros. That is what the standard limit under OECD's BEPS section plan is, right? So it is only applicable in that case. It is not applicable. It could be applicable in your client case if it meets certain criteria. Else, in general, it is not applicable. I have not seen. So out of 40, 50 or 80 cases we have, only in 1, 2 cases CBC is applicable. That is how it goes, right? Now, Form 49, again, safe harbor application. So every country might have certain safe harbors, may have or may not have. Like, every country may have certain safe harbors. In India, the safe harbors, we do, to claim the safe harbor, we do file a form, which was earlier 3CEFA, that has been, changed to form number 49. Whatever I'm trying to say to here is whatever, what change for TP, these are also your services to your clients, right? You can charge your client for filing Form 48, for drafting Form 48, certifying Form 48, and also for filing Form 49, right? So these are the areas from where your compliance services do arise, right? New block TP assessment. Now, as you understand, also this is also one of the area which of practice which may emerge, in this particular act. And block assessment has been introduced. I think it was introduced in 2025 or 2025. I think it was introduced under Finance Act, where for 3 years you can take the comfort of the TP positions, which from the officer itself. Like, you can take the approval. I mean, for not the approval part, but you can take you can file a block assessment form with the officer, so that you can ensure your client that for 3 years the positions are locked, right? So that is what we call block TP assessment. These are all certain things which the government is doing to reduce the administrative thing from the officers, which are already bundled with many TP cases every year. To reduce that, these are all administrative things which the government is doing, and where you obviously, you as a CA, can support your client, and then can offer services accordingly, right? These are all important things for your client perspective also, so that at least your TP litigations get closed easily, or TP is being administered easily, right? India is a very mature jurisdiction when it comes to transfer pricing, unlike UAE. Let me give you quite on UAE part also. UAE may just last TP law. I mean, obviously in 2022 they enacted the Income Tax Act, where the TP provisions were there. Last year we have seen major filings into transfer pricing, right, where people have filed transfer pricing reports. I mean, TP reporting have been done along with the CT returns. There are specific schedules also that I'll show you afterwards, once when we discuss on that part. Right. Now, this was basics of TP, that how TP, what is the scenario of TP in India, what is the framework. Now we are entering into one more important area. Now it is very important for you guys to listen and understand, right? How TP provisions are structured in any of the act. If you go in any part of the world where TP is applicable, say India has, Singapore, UAE, Australia, UK, US, you need to understand one thing, that everywhere the TP provisions will be structured in this manner only. Not in this manner, the flow could be could be up and down, that's all fine, but it will cover all the provisions which will revolve around this particular aspects. These are five buckets of transfer pricing, right? Transfer pricing provisions. So this is how the transfer pricing provisions are structured. Even if you read TP law, you should follow this particular manner, or follow this hierarchy, so that it is easy for you to understand the entire provisions in a very smooth or easy manner, right? Now, just give me 1 minute. Yeah. So I'll explain how the TV provisions are structured under the Indian Income Tax Act, and also under the UAE also. I'll also tell you that, right? But what are the five main buckets? Now, obviously, whenever a TP case comes to you, now how you as a consultant will judge a TP is applicable or not. All right. So there are set of certain provisions from where you judge the applicability of transfer pricing, right? So first, obviously, the sections or the charging section, as you may know, it's a very common name, that under erstwhile law, section 92 was a charging section. So that is where you try to understand that whether TP is applicable in the case or not. So judging the applicability of TP provisions, what it may contain, it may contain, say, whether the two entities can be considered as related parties or not, or can be considered as an associate enterprise or not, can be considered as connected person or not. So when it comes to UAE, the terms are related party and connected person. When it comes to India, the term is associate enterprise. Right. So whether, if there is also any transaction which has happened between two entities or not. So for example, I'll give you a very classic example here. So if a director is giving guarantee to the bank on behalf of the company, that is also a transfer pricing transaction when it comes to UAE, right? In India, domestic transactions are not covered under reporting framework, but still, if it crosses certain limit, and there are certain limits for domestic transactions reporting as well when it comes to India. But when in UAE, if a director is giving guarantee to the bank, so that bank can give loan to the company, then it gets into the TP provisions, right? So you need to understand that if any arrangement which is not on paper, like which you cannot, which is not there in books of accounts, but still it can get covered under transfer pricing, and then you have to do the analysis accordingly, right? So that is how you judge the applicability of transfer pricing in any of the case in your clients, or in your client case. Then obviously, once TP is applicable, what you will do, you will try to understand that what is arm's length price. You will try to compute or evaluate the arm's length price, right? So that is what you're going to do, right? You need to compute arm's length price. So in India also, we have set of sections. Now, see, first we understood that applicable provisions are there, right? Then we have to understand, then there are computation mechanisms, like arm's length price. How you compute arm's length price, that is where it will be guided under particular relevant transfer pricing provision of that particular country, right? In India, we have 92C, 92CA, right? 92CA is basically on litigations, but 92C drives the computation of arm's length price in the erstwhile law, right? Then, obviously, once you do the arm's length pricing thing, then obviously you have to do the compliances, and you have to file the form with the government authorities, right? I mean, there could be again a threshold limits for filing, not filing, for maintaining documentation, etc. There could be threshold limits, but then obviously you have to ensure that compliance is being done, right, by the client before the due dates. Right, so that is what compliance is all about. So once you have filed the TP reports, once you have filed not TP reports, but once you have done the reporting part of transactions, filed the master file, etc., whatever you have done as compliance, then obviously litigation may happen. So there would be also a set of sections where litigations may happen. Then there are also resolution mechanisms, just like what I mentioned about the APA part, right? You all understand what is APA. Just if you also don't understand, I'll be, technically explaining that APA, right? Sriram, five buckets is basically these are the buckets. Judging the applicability, computation of arm's length price, dispute resolution and resolution mechanisms. What is APA is there, mutual agreement procedure is there. So these are all resolution mechanisms where you try to, ask government about the doubts, and you and government come onto the same page to ensure that your client is safeguarded from any further scrutinies from the government authorities. Because if you see in transfer pricing, if the litigation goes, it can go for 5 to 6 years. Normally 5 to 6 or 5 to 8 years. I have seen litigations going till High Court. It may go till Supreme Court. It may go. There are various forms and format, like question of law hai, question of fact hai. So appropriately, your litigations may go till 5, 6, 7 years. Like if you so to instead of instead of spending that much amount of time, money and for the client, there are dispute resolution mechanisms which has been under transfer pricing, right? Then definition, guidance, and examples. Obviously, these are an add-on material from where you can understand and which more clarifies onto this particular four buckets, right? Everybody clear till now? You understand how TP provision is structured? Right, we are still, we are yet to start begin with the sections and provisions, but is it easy for you guys to understand? Seems easy. If you think that this is easy to understand, you can type in the chat box as easy or E, right? And I would request you to be, attend. I mean, interactive more. Obviously, you might be attending this, but please be more interactive. If you want, I can also unmute you if you want to discuss any case. I'm free to do that, but obviously I cannot unmute you all at a point of time. But if you want to discuss any case, once when we go ahead, please feel free to put down in chat box. So I'll unmute you and then we can discuss on the case. Let us keep this session as a next to offline session, like where I am explaining you the things and we are discussing with each other, everything, right? So that is how you'll be able to learn, right? I hope this clarifies that how the TP provisions are structured. Now comes the technical part, right? Please don't, if you are not able to remember this, it's all fine. Like once when you start practice, once you are into regular practice, you will be able to understand this. So now, how sections under ITA 1961 and ITA 2025 have been mapped, right? So as I mentioned, that applicability provisions would be there. So what are the applicability provisions under the Indian Income Tax Act previously, and this one? That is, Section 92 was computation of ALP. Section 92A was understanding that who all are associated enterprises. Then Section 92B, that is international transaction kya hota hai, correct? So these are three main major thing, and SDT obviously, specified domestic transaction. These are the four sections from where you can understand the applicability of TP provisions, whether the TP would be applicable in your client case or not, right? So from there, you'll be able to understand, right? Then after this one, 92C, that is computation of arm's length price, and then there are rules also associated to it, rule 10A, 10B, 10C. They are all computation rules, right, which provides the provisions for how you compute the arm's length price. And then after dispute resolution, like transfer pricing officers reference, section 92CA is for not dispute resolution, it's for litigation basically, where a case comes up, in transfer pricing, then the adjudication happens under section 92CA. Then there are safe harbor rules, advanced pricing agreement, and then there's a compliance and documentation. And 92F is where the definition, I've not mentioned here, but there's a definition section also, 92F, right? So that is how it is structured. So now tomorrow, when you open the book, or tomorrow or day after, once when you resume your office, you open the book of, say, if you open the act, when you learn transfer pricing, try to learn in that manner. That first, close on applicability, understand the applicability part, and then after you go for ALP determination, that is computation of ALP, and then after litigations. Obviously, once you do the compliances, uske baad litigations will come. So compliances ka section is 92D. Now in the current scenario, it is 171, right? So that is how transfer pricing sections have been enacted under the 60. So were enacted under 1961 and has been enacted under 2025. I hope this clarifies, correct? I'll move to the next slide. Now we'll go dig deeper into applicability part, right? So when we discuss about the applicability, two main important definitions are, that is first associated enterprise. Now we are right now focusing on the Indian transfer pricing provisions, right? On UAE will come up. Now, when you see Indian transfer pricing provisions, so when does TP apply, right? So there are two main pillars through which you can judge that whether TP is applicable or not. There's also a third pillar called income that I'll discuss afterwards. But first, let us understand these two main important pillars. First is associated enterprise, right? Now that is given under section 162. What is that? Section 162 technically tells you the situations where associated enterprise relationships triggers. What is a relationship or associate enterprise relationship? Whether when two entities or two entities, here please also include, or where two persons, let me put it that way, so that we are able to include the individuals also, where two-person can be considered as an associated to each other, say by way of three pillars. That is, one is capital, second is control, third is management, right? So what do you mean by capital? What do you mean by control? What do you mean by management? Now, in income tax, there is no specific definition to define what is capital, what is control, what is management. So what has been done under our Income Tax Act is, that is under Indian Income Tax Act, that they have tried to put down certain situation which may technically, trigger the associated enterprise relationship, right? So what are those conditions? First is, in case any of the entity directly or indirectly have a 26% holding, say, by common shareholders, or probably one entity holding directly into the other entity, or through indirect manner they are holding, then in that case, a relationship can trigger, right? When one entity is also giving a loan to other entity and the loan value is more than 51%, irrespective of who's owning, both the entity, who are the shareholders in both the entity, still, if it is having more than 51% of the total book value of the borrower's asset where the loan has been given, still it may trigger a relationship, right? I'll give you a classic example here. So there's a so say for example, there's a company in Gift City which is being held by, say, petrol, I mean, say a big company, right? Say Reliance has, I'm just giving a hypothetical example, please don't take it as a real example. But say, for example, there's a Reliance group, right? And it has a subsidiary in Gift City, say Reliance Finance, right? We are just naming it. So Reliance Finance shareholders are people from Reliance Industries, or Reliance Industry would be the company shareholder only in that entity, right? Let us assume that. Now, if say a Morgan Stanley bank gives loan, or probably any investment bank, I mean any, not investment bank, any of the banks, say Bank of America gives loan to Reliance, this entity of which is there in Gift City, and that loan amount is more than 51% value of the borrower's asset. Correct. In that case, also you are required, the A relationship is triggered, and you are required to justify the rate of interest for that loan. This is just a example which I'm trying to give. So you don't need to escape TP in that case. Also, you have to assess that condition also in your client case. So if they're getting loan from any overseas entities which doesn't have more than 26% holding, but still the loan has been funded in a manner that it crosses 51% of the book value of borrower's asset, or vice versa, in a reverse way also, where Indian companies, say, for example, sending funds to its subsidiary where it has less than 26% capital, but where the loan amount is more than 51%, in that case also a relationship may get triggered, right? So when it get triggered, obviously TP is applicable. That is what the understanding is all about, right? So that is one about the loan part. Then, so that is how we are trying to establish, not through capital, but through control or management also, there could be certain triggers which may happen. Right. So board controller power to appoint directors, then operational dependence on other enterprise. Obviously, if one entity has a power to regulate the board of the other entity, or to appoint directors in the company, obviously then it can be seen that there exists any type of relationship between those particular entities because it can influence the transaction, right? And that is what the intention of transfer pricing is all about. Why it has been enacted? Because it can influence the decisions, right? The relationship can influence the decisions. What they do by influencing, they save taxes, right? As simple as that. So there are around 26 deeming conditions, and any one condition is sufficient to justify the AE relationship, right? And this applies to both domestic and foreign. Many people have seen that only telling about that, two entities, out of which one entity is outside India. Only that's where you have to do TP. No, TP can be done between. So AE is not bounded by any geography definition of AE. This is what I want to say, right? For the domestic transaction also AE has been defined. For international transaction also AE has the same set of definition. you know it's more technical part. We'll try to understand that afterwards, but technically, both there could be domestic AE also and there could be foreign AE as well. The concept is that, right? Now let me give you a situation. Let us make more this interactive. Like, now I hope all guys, you guys are listening to me, listening to this podcast, right? So let me ask you a question, right? Now I'll give you a situation. Say, for example, there is a UAE entity, right? And there is Indian entity, right? They both have different promoters, different owners, different shareholders. But so there are two directors in Indian company, one director in UAE entity, and he owns 100% in the UAE entity, the stake of UAE entity. Now that director technically, so now there are two things here. First, the Indian entity is more than 90% sale of Indian entity is being done to that UAE entity, and then UAE entity further sells to third parties. That is what the transaction is. The second thing is that the director of UAE entity has provided guarantee to the bank of the Indian entity to provide loan to the Indian entity, right? He has not given the loan. Loan has been given by the bank, which is in India, basis the guarantee which that particular director, which is again not a owner in Indian entity, but he has given the guarantee to the bank so that bank can give loan to the Indian entity. In this case, whether there exists a relationship between A, director of that UAE entity and the Indian company, and B, UAE entity and the Indian entity. What would you say? You got the question, right? I presume I was clear when I put out the case, right? What is your view? Anybody wants to take up, or should I explain the case again? In the chat box, guys. At least let us be more interactive. Let us be more attentive. Then only you'll be able to learn. Right? No, I cannot start technically directly. I have to put the background. So that is where I think I have made you comfortable enough to understand that how TP is getting triggered, and it will be very interesting for you. Like you don't have to put down much more efforts in writing anything. Just try to understand everything so that you can identify opportunities easily. Okay, so Sriram says that it is not an associate enterprise. Okay, so when you write yes or no, please also give reason basis what, right? We cannot just have yes and no as an answer, but at least why it is applicable. See, Mohit says yes, right? But why? What is the triggering point, right? We are dealing with the legal law, right? We are dealing with the legislature. So why you are saying yes? Why you are saying no? There needs to be have a reason. Or if you want to, Sriram, Mohit, I can unmute you also, guys, in case if you want to discuss. Sonal says guarantee. I think we should look at the threshold. India law says 10%. For sales, I think it's 100% threshold along with other things like ability to affect the price. Okay. Uh, it was confusing, but still, I can understand this thing. Director giving in personal capacity is not having any relationship with the entities undertaking the transaction. Okay. Okay. So generally, let me tell you, you want me to, anybody want me to unmute you if you want to discuss this particular case? I can unmute you. You can just, type unmute so that I can unmute you particularly and we can discuss the case. Or I can obviously explain the entire thing. All right. I think nobody has written unmute, so I'll just explain the case. All right. So why? So from my so now this is my consultant's view. You may have your own views, but fundamentally, as I mentioned, that there are three main pillars under transfer pricing. What are those three pillars? Capital, control, and management. Any of these pillars getting triggered, directly or indirectly. Say the director is trying to control the company which is in India where he is not owning, but at least he is trying to fund that entity through loans. Be it a loan has been given or not, that's a secondary point. But still, he has tried to facilitate that entire transaction by providing the guarantee to the Indian counterpart, right? Then don't you think that that could be a control, and where obviously the director's entity, which is again, he is holding 100% in UA entity, as I mentioned earlier, he's holding 100% in UA entity. Now he is also taking 90% of the sales from this Indian entity. So can it be said that they are sourcing the goods from the Indian entity and then they are selling to the third parties, right? When they are sourcing, so Indian entity is majorly selling to that particular UA entity only in this particular case, it will be very less defendable, right? It will be difficult to justify the non-AE. There exists a relationship clearly in this case, not clearly also, but still, if the more trigger would go into the A relationship favor argument rather than the opposing of A relationship argument. Why? Because director particularly has funded. See, in third party scenario, nobody will come and give guarantee on behalf of you to the bank, right? Please understand that way also. In a third party scenario where, in case if you want to buy a house also, probably for you that you're going to take a loan. Now, who will give you guarantee? Either your friend who knows you and can come to you, and then he can give the guarantee. In this case, we don't assume a friendship wala relationship, but we assume that there's a third party person who's coming and giving guarantee to the bank, just so that bank can fund the loan to you. Tomorrow if any default happens, then that person has to take the risk. He has to sell the assets. So you have to look into that manner, right? So obviously that technically establishes a control part. As I mentioned, that capital control management has not been clearly defined under the Act. It won't be defined under any of the Act. Only the Act will try to clarify more that what could be considered as a control. But proper definition that is exhaustive or inclusive definition which includes only this is control, it is not possible, right? Even if it is possible, even if they have defined control, say in UAE they have tried to define control, right? Somewhere I have seen obviously that the control has been defined, but still, if you read the definition, they have kept certain loopholes so that they can also include any other cases which arises apart from their particular provisions, right? So it may trigger a relationship. Whenever you judge a relationship, now this is also most important because we got certain cases that way also, and we have given opinion. So we don't give opinion, but we have given our approach note, which contains all the analysis. Now, a case came up to me this year. I think it was this year, early this year, or last year, where the CA was not able to. So CA was of the view that a relationship may exist, and this case was entirely the same. CA thought that case, there exists a relationship, and they had not done filing only for Form 3 CB and everything. Then they came to us for an opinion that please analyze this entire thing. We analyzed it, and then we understood these were the only facts into the case. Then we analyzed the entire case, and obviously we gave an opinion on a very conservative basis that okay, there exists a relationship. You should file TP forms and everything. You have to do the TP compliances. That is, you have to ensure that the transaction happens at an arm's length price. Why it is important? Because in case if this would have been missed, then 2% penalty would have been charged, right? So that is what the important is. The opinion would cost around hardly 40-50,000, right? Not more than that. For this particular case, 30, 40, 50, we can charge. I'm just telling you tier two rates, right? Even if you go for big four, obviously they'll charge more than 1 lakh, 2 lakh for this simple thing as well. But technically, the point is that that's a source of income for us, right? Where we give advisory to the clients that whether TP is applicable or not, and genuinely people do come with us for this particular thing, right? It's not something that is not prominent. Generally people may have confusions, and that's where even client also understands, because when we went to the call with the client, we made him understand that for applicability we have to assess the everything. We have to do this and ensuring compliance. See, in India, the mindset of people is that let us not do compliance, let us avoid it. But in outside countries, people are much more sensitive when it comes to compliance. They don't take much more risk. They don't want to get involved into any government litigations to the extent possible, right? because they know and the penalties are very high. And in India also this scenario is being developed gradually, right? So where people are moving from taking more risk rather than taking less risk when it comes to taxes, right? We have a chat. We have a question in chat box where whether control held by director makes the company's transaction subject to TP. Obviously, you are yourself saying that control, is being control is being done by director, so that is subject to TP. Then, if you are dealing with India TP, you have to see that in case domestic transaction is there or not, international transaction is there or not. So that's where you can arrive at your conclusion. Guarantee for a loan amount immaterial to the transaction value also treated same way. No, in that case, we can take a favorable position, but still, it will depend on case to case. That so in this case, if you understand, even the sales was happening to the one entity only where this director was owning that entity. So in that case, it is very predominantly, you can obviously establish control. Obviously, we when we gave the opinion, we technically referred to specific provisions. This 26 deeming condition message, we tested each of every condition and we tried to analyze each and every condition to the literal interpretation, whatever it is written in the law. And there were certain conditions where there were open points, and we had to mention that, okay, this is where the exposure may lie. So that is how you can give the opinion. I cannot share the opinion document right now, obviously, because we have to keep certain things confidential. But yeah, this do happens. So now you can identify TP opportunities in this manner also when it comes to client, right? Everybody clear now? It seems interesting. Yes, no in the chat box. Yes, no. Should I go ahead? All right, great, great. Thank you. Others also you can respond in the chat box. I mean, it's not a boring thing. In case if you feel it boring, just let me just type boring in the chat box and we'll play some sound or something like that. I'm also fond of AI. I can show you many things which I have developed with AI, right? In case if time permits, I can show you that what developments we do with AI. Right. Now, we go to the next part. So that was associate enterprise, where I have tried to explain the entire concept of associate enterprise. Now we go to the next concept, which is international transaction. Now, as I mentioned, when we talk about the applicability, two most important things, right? Now, two most important things here, main important pillars, right? First is associate enterprise. The second is international transaction. Associate enterprise, I hope it gives you clarity. Obviously, you are not going to become an expert in one day. So, do read the things easily. Do try to understand more situations. This will open up your brain and, will help you to easily to enter into this particular area of practice. Now, that is what associate enterprise means. Now, we go to international transaction. Now, what is international transaction? Basically, it's a transaction between two entities out of which either one or both entities are outside India. That is what we call international transaction. Now, it technically so is under definition of section 163. Now, what is a transaction? Now, if you see here, tangibles, that is, you are transacting in goods, say sale or purchase of goods, machinery, equipment, vehicles, commodities. Obviously, you know that you account for that in the books of account. Even sending free samples, which are not accounted in the books of accounts, is also a transaction. Just a second. Just yeah. So even so sending of free samples can be also considered as a transaction, right? Then intangibles, when you are dealing in intangibles, say patents, know-hows, trademarks, or even if you are giving license to some other entity to use these intangibles. It happens in pharma, it happens in many service sector also, where the license is being given. Then that are also called transactions, right? Then customer list, digital rights, contractual rights, as I mentioned that, license to use some IP also, it's a transaction, right? Services, technical management, HR, finance, IT, R&D, all services are can be covered under transactions. As I mentioned, that providing of guarantee is also a transaction. Apart from loan, taking insurance on behalf of the other entity for the employees of the other entity, on the logistics, etc., all are covered under transaction definition, right? That all any transaction which affects the profits, income, or assets, obviously, directly or indirectly, is covered under this particular concept, right, of international transaction. Then there is also concept of domestic transaction. I'm not going to much more detail into domestic transaction, but domestic transaction is basically when two entities, out of which one entity, domestic is basically obviously two entities are there in India only, and out of which one entity is taking a concessional rate. Say, for example, you have a manufacturing entity client who's taking 17% concessional rate, who's opting for that. So, who's going to pay tax at the rate of 15% plus surcharge and plus cess to the government. That is 15% is a concessional tax rate, right? Or if it's a sales unit, SEZ unit, who's taking the exemption of the profits. And if it is dealing with the other entity, which is again with an AE, domestic AE, then technically that transaction is also required to be benchmarked if it crosses a value of around 20 crores. So there's also a threshold for that, right? Not every domestic transaction, but when well, not every situation where you have to do the domestic TP, but when it crosses a 20 crore threshold, then you have to do TP, right? Also, one more important thing in India, while domestic transaction have a threshold for TP, the international transaction don't have threshold for TP. So even in a zero value transaction at international level, so if you're doing an international transaction which has even a zero value, say for example providing of guarantee as I mentioned, or what could be the other examples, like even at zero value, like you are sending a samples to your AE, still you are required to benchmark that transaction from that arm's length perspective, right? So that is how the concept of transaction is in India. Now there it is very important for you to also understand that if TP is applicable on every transaction, which is international transaction, right? You have to do analysis, you have to guide your client to do TP in every transaction. You have to file form 3CB or form 48 for every international transaction, right? But only you are required to maintain document, or you are required to prepare a proper document under the requirements of rule 10D only if that aggregate value crosses say 1 crore, right? So that is what the limit under Indian tax context is. But TP analysis has to be taken for every related party transaction. That is every international transaction happened between associate enterprise, right? For that we have to do the TP analysis. While you don't maintain TP file, for that the 1 crore limit is there. Also, let me tell you that receivables and payables at the year end, they are also considered as an international transaction. I mean, certain firms have position that they don't consider it as an international transaction. Our firm position is that if there are receivables and payable on year ended with your A's, with the client having the receivables and payables with its A's, in that scenario also we can do the so we have to report that particular international transaction into the form number 3CB, or at least you have to mention in your TP report that these are also international transactions, right? We always recommending we also consider, yes, advances given to overseas related party, that is AE, is included, right? If you have given advance also, even it is for trade advance, like trade advance if you have given, or if you have given any loan obviously it is covered, but also receivables and payables as on year end date which you report under your financial statements, that are transactions, right? This is the most important, which many CA firms I have seen missing out on the things, right? Now we go to the next part. Right. Indian TP thresholds and compliance calendar. You can take a snapshot of it. Like, in India, so what happens in India, how the compliances are driven under Indian context is, first is obviously, as I mentioned, that if your international transaction crosses 1 crore, then for that particular year, you are required to maintain a TP documentation, a local file. Now, what is a local file? Local file technically is a document which covers all the functional economic analysis, the justification, documentation. I'll show you local file. When I show you the UAE part also, how we maintain the TP audit ready TP report, it is almost same like Indian local file. So I'll show you at that point of time that how we maintain that entire local file. Right, so that you have to justify the transactions into that particular, you have to document it, that obviously when the case comes up, you're not going to go orally and say to the officer the things, right? You have to show, you have to produce a documentation of the arrangement, right? That this is what the functions have been performed, this is what the risk which have been assumed, etc. So that is how you have to maintain the local file, right? You have to show the local file. That is where the compliance comes up. Then, obviously, accountants report, that is Form 3CB, it was earlier. Now it will be Form 48 from the next year, like not in this year. From the next filing, it will be Form 48. So, what is Form 48 basically, or Form 3CB? Where you do reporting, right, of transactions, where you write transaction. So now that is for any international transaction or SDT beyond 20 crores. Like it's not any SDT, but SDT value more than 20 crores or any international transaction. Technically, you have to report that particular to the to transactions to the government authorities, right? Then master file, as I mentioned, master file is a group level document which comes up, right? So what is a master file? It contains group level information. Right. Just a second. Let me just silence this. Just a second. Uh, sure. Yeah. Yeah. Oh, because this is silent. I'm not sure. So why it is still, I don't know how to use Android phone. Okay, someone has not received link. Yeah, some let me just yeah. All right. Right. So this is master file, then CBC filing, then safe harbor application. As mentioned, that master file is basically, I was on master file. I'm sorry for that distraction. But yeah, master file is basically the group level document, which is, which is there technically, which is at a group level document. Just give me 1 minute, guys. I'll think I'll have to respond to this guy. Okay, just give me 1 minute, guys. I'll have to send someone a link. Okay. Just a minute. I really think, people, if you are not I mean, if you are seriously interested, you should technically join the session, and you should register in time. This guy is messaging me for that he has not received the link. I generally don't take such things when during the session, but let us help him. I want people to learn. Like I don't have that intentions that someone should learn. But I have just texted him. Good. ठीक है. Now we'll start. I'm sorry for this distraction, but yeah, let us go ahead with our topic. Yes, you can also take a break of around you can have a sip of waters, etc. If you have the water bottle, have a sip. I'll also have a sip. Yeah. So then obviously, this is the compliance calendar. You can understand. Obviously, I've discussed many points from this. In case if you want me to explain any specific thing here, I can explain, or we can go to the next slide. In the chat box, like anybody of you have want me to explain anything, like these are all compliances part when it comes to in India when you are doing a transfer pricing compliances. Should I go ahead? Okay, master file threshold. Okay, now let me tell you master file. All right. Now let me show. So first of all, what is master file, right? First, we need to understand. I'll give you background so that it becomes easy for you to understand, right? Now, what is that background? I'll tell you that OECD is a forum, just like you all know UN, United Nations is a forum, right? Where most of countries are member of UN. Just like that, in OECD also there are certain countries who are members of that particular forum, and there are certain countries who are just observers of that forum, right? India is basically an observer. India is not a member of OECD. As far as I know, I'm not sure if it is a member. तो मेरा knowledge updated नहीं होगा उतना. Correct. Now, if you see here, OECD in year 2011. Now that is where you might have also heard about Amazon, Facebook, Microsoft. They are all saving on taxes usually by technically buying treaties. Treaty shopping से वो लोग tax save कर रहे हैं. Yeah, if they are opening their company in Ireland because just to save on major. So, the scenario was that this revenue which these companies were earning, say for example, profits they were earning at a console level, say it was 100 rupees, they were just only paying tax of around 1 to 2 rupees. At least this should not be the position, right? For the big groups. So what came up in OECD, you know, what came up in OECD? Yes, we need to report every international transaction with AE or with only above. No, so we have to report every international transaction, right? So what came up with OECD that many countries, the government authorities of the countries, the concerned government authorities, like in India also and in other countries also, they told OECD and they came together, to introduce an action plan against this MNEs because this MNEs, that is multinational groups, MNCs, they were smartly doing everything. Like, they used to show substance, they used to do everything, but they used to take benefit of DTAA and the rulings on that and legislation. Obviously, the consultants were there to, help them to ensure that the most tax efficient way they structure their entire holdings so that they can park their profits in a jurisdiction where there is a less tax, right? In a very broad sense. So US, UK, major economies of the world came together to introduce action plans to curb these countries because obviously the country from where the income is being earned, ideally that country should have the taxing right on that particular income, be it being earned by foreign company or the domestic company, right? In India also, you may see we have different tax rates for foreign company and different tax rate for Indian company, but we do tax foreign company, right? So that is where, as a taxing right, they didn't had the taxing right due to these arrangements which were formed by these multinational groups. Now that is where OECD came up with a 13 point, 15 point action plan. उसमें से action plan 13 to was introduced with an objective. So action, you can read about the entire literature. It is commonly known as BEPS, basically base erosion and profit shifting. So these are BEPS practice. This were the BEPS practices which were happened, which were being done by many M&E groups, right? Many multinational groups, just like Microsoft, Facebook, Amazon, many groups, like major groups, Adidas. All these are big giants, big groups, right? At an international level, if you see, there are many such groups which do operate and which have a turnover more than 750 million euros. So targeting those particular groups, not only those particular groups, but also at a local level, also the groups which were at tier 2 level, the groups below 750 million constant turnover, but still, having a substantial amount of revenue, and the taxes that they were paying were very very less in that particular country. So to ensure all such things that the country from where the income has been generated actually gets the right to tax on the profits of that particular on that portion, action plan to curb this base erosion and profit shifting were introduced. There were 15 action plans. You can it's a very long story. You can read that. If you search for OECD BEPS action plan, let me put in chat box also, so that you can search it. 15-point action plans, right? So this was back when I started my TP career in 2014. So at that point of I had done research more on this. Obviously now I just focus more on the the more provisions, country by country provisions part, right? But this was 15-point action plans which was introduced by OECD. Out of this, action plan 13 was also which referred to that preparing of three-tier documentation structure, implementing of three-tier documentation structure. What is three-tier documentation structure? It is basically that थ्री टीयर मतलब तीन टाइप के डॉक्यूमेंटेशन. प्लीज अंडरस्टैंड दैट वे ओनली. आई बी वेरी सिंपल इन एक्सप्लेनिंग, राइट? There are three types of documentation. First is a local documentation, which is you might have heard about local TP report file. Let me only show you that particular thing. Like if you allow me, let me just open that. Let me show you all three tiers so that you can understand. Mhm. Able to see a file here which I have, can anybody please confirm in the chat box if you're able to see the file? Yeah, right. So what is local file basically? If you see here, I'll just go to the first page. So this is for UAE part. We have, prepared this is not a local file basically. This is a TP report. As I mentioned that when I'll show you the TP report, auditory TP report, which we have prepared for the UAE part. Now, what is local file? Basically, local file, just for the sake of understanding, it technically what it covers. I'll just show you the contents first to make you understand what it covers. that in local file, you technically deal with local transaction which the taxpayer entity to which TP is applicable. You are documenting that particular transaction. If you see here, I have tried to document purchase of goods from associate enterprise, then what are the aggregated transaction. So at transaction level, I will do the analysis. That is what the entire intention of local file is. Now, what is master file? If I show you other document, what is master file? So this is a master file which we have created for one of our client, for one of the client in UAE. Now, if you see here, master file. Now, if you see here, master file technically will cover a group level details. If you see here, organization structure of the entire group, that is legal structure of group, then geographic locations of group entities, then what the group does, its business, product portfolio, then, five largest products, then functional overview, transfer pricing policy. So these are all group level things which we show in a master file, right? Which we have to document in a master file. There are many requirements in when you do the master file task. But when you see here, these are all the contents of the group at a group level. While vis-a-vis, if you see local file, it just contains a transaction level analysis, say functional analysis. That is, if I just go to here, functional analysis, I will be trying to justify this particular how transaction, how it has happened, what is the role which is being played by both the entities to the transaction, then what are the risks which they are assuming, and what are the assets which have been employed. If you see here, I hope the screen is visible. So if you see here, technically, these are all the things that we try to cover at a transactional level, right? When it comes to local file. So that is what the difference is. So there are three documents. If I tell you that there are three documents, basically. First is local file, which I showed you, that which captures transaction level issue. The second is obviously a master file, which technically group level ke sara, it is documented. Now, the third documentation was CBC report. What is CBC report? Now, for this particular big groups like Microsoft, Reliance, etc., big groups, where they have a turnover of more than 750 million euros, which is equivalent to around 750 million euros would be equivalent to around now, so it would have been, increased. But in India, we have that particular threshold of 6,400 crores INR, basically. So 6-7 हजार crore की ऊपर की company, basically, where they have console turnover. It's a group structure. That's where CBC provisions are applicable. Now, what is CBCR? Now, I don't have actual CBCR report with me. But yeah, you can search on Google. You can find CBC report formats. It's all standard format. Every country has the same format. CBC report you have to file where you have to show that where the subsidiaries are located, subsidiary or joint venture, or the company who can be considered as a constituent entity of the international group, where they are located, what number of employees they have, what is their sales turnover. Why we do this? Basically to understand what substance that country has, and what actually taxes are being paid to that country. For example, I'll give you a very classic example here. Assume that Microsoft US has only 3 employees, correct, in USA, and they have a team of around 200 employees in India, right? And then they're earning a revenue of more than 600,000, 6,000 crores, basically, right? Just for example, and where they're earning a revenue of more than 750 million euros at a console level. What do you think? If they are parking the profits in US, does Indian entity will agree to that? For example, they have a profitability in their profit and loss, which is around, say, 30 to 40% on the sales what they have made, correct? At a console level, consolidated hota hai financials. Microsoft US is a main holding company. Microsoft India is a subsidiary company. And Microsoft US जब third parties को बेचता है, when they console the things, right? Console India and US मिलके जो बेचता है, so obviously it is US who is selling to the third parties. And when US sells to third parties, it is earning a revenue of around 8,000 crores. Just assume the figure, right? Which is more than 750 million euros, right? And when they are trying to keep profit in only US, where they only have 3 employees, compared to 200 employees in India. Is it fair? Yes or no? So that will be tracked from CBC report, which can be exchanged within the countries by the authorities. So if Microsoft US is filing CBC report, say, I won't use US jurisdiction because US is not a part of that exchange information network, but still, I mean, it is there. Again, the exchange can happen, but not through ACD's ML, I think, technically. But say, for example, Microsoft US is filing CBCR in Germany with his German subsidiaries filing the CBC report. Germany can easily exchange the information with the Indian authorities that was we have received this information from Microsoft, and if Indian authorities do request that information, Germany has to give that information. So that is how the exchange network works. So you might have seen the exchange clauses under the DTAA also. So that is how it works, right? So when you see here that CBC filing technically covers this particular details. What details? The asset which in every country this group has and the entity has entity name, उसके नाम पे जो assets है, जो employees who were there on payroll and the sales that they have made into that country. With this three particular document only, the parameters only, they'll come to know. And I think profit and tax are also a part. I'm not sure if they're included or not because it's way far before I had seen the CBCR. So technically, in that scenario, they'll try to get that entire information and then they can obviously do the assessment. So that is what CBCR filing provisions are there, right? Then safe harbor application, as I mentioned, there are certain transactions under transfer pricing where government itself have said that you have this TP policy, you can file a safe harbor so that they won't litigate much more to this particular aspect. While the government will always keep open their way, but when I discuss safe, so this was CBCR previously I discussed. Now I'm talking about the safe harbor, right? Are we clear till say CBCR filing? Let me ask you that first. What is CBC filing? What is master file? What is local file? Form 3CB, I think I'm sure you might have seen that. If you have not seen that, be resourceful. Use Google or Perplexity or ChatGPT, right? So now till CBCR all are clear, right? What I'm trying to explain as a compliance part, right? Now safe harbor application comes up. Now what is safe harbor application? Safe harbor application is basically where in every, so most of countries, depend on every country to country, their economy, etc. But in India, to reduce the litigations before the officer, what the government has done, the government has enacted certain safe harbor provisions. What are those provisions? So for example, if there are very standard transactions which are happening, say for example, when a company is giving IT services to the counterpart, AE, and where the company is not taking much risk, Indian company. In that scenario, a company can go for a safe harbor, that is charge cost plus 15% to the associate enterprise, and then they can receive the amount and then they can file for safe harbor form. What is safe harbor form? It is to reduce the litigation, whatever is being filed by the company, and they do declare that okay, they are following this entire practice. Obviously declaration has to be there so that it is ensured that yeah. So it is ensured that they are complying with all the norms and appropriately they are going for safe harbors. So safe harbor are basically, by meaning it mentions that the litigations won't be much, right? If you file that particular form and if you comply with that particular services, right? So that is what safe harbor application means. You can research on it more on Google so that you can able to understand what a safe harbor form looks like. It will cover all the transactions. I mean, it covers most of transactions. There are certain transactions which are called eligible transactions for which a safe harbor application can be filed. Not all transactions, not for all transactions a safe harbor is to be filed. I'm sorry, but for certain eligible transactions, you can file the safe harbor. So yes, very good question, Srinath, that no documentation, other compliance is required. No, you still require documentation. That is, if your documentation limits are crossed, so you have to file Form 3CB. It's not that you don't need to file Form 3CB. You have to file Form 3CB. You have to also file TP report, but this is an additional application that you are making to the government authorities just to ensure that that you are safeguarded from any litigation which comes up in future. So for example, if any litigation comes in future for transfer pricing, then officer will issue the notice, then you will respond, you will provide the services. Generally litigation fees for TP starts from 30, 35, 40,000, depends on case to case, but 35, 40, 45,000 से fees शुरू होते हैं उसके. Now filing for this safe harbor cost around like 20, 25,000 plus 50,000 at first level litigation fees, plus in it goes to next DRP level, then again a fees will be charged by consultant again till high court fees could be charged. So to mitigate all such administrative thing as also a cost burden on the client can go opt for filing of safe harbor, but that is only on certain eligible transactions. Not all transactions you can file safe harbor. You have to assess that. So there are rules for that. Safe harbor, if you search, there are rules for that. The form which is to be filed, I think rule 10T से लेके पूरा safe harbor का rules शुरू होता है. So 10T, 10TA under the earlier rules. So that starts for safe harbor filing, and then you can advise your client that whether they should go for safe harbor or not, considering the size of the business, materiality, etc. So there are certain norms also, eligible transactions होते हैं. For that, you can go ahead with the safe harbor thing. Yes, so safe harbor, yes, the due date, yes. So it's not before the AO order. Basically, it is before the ITR. The due date is, it's been incorrectly mentioned. This entire presentation has been generated through AI, and I have only got a very less time to review this, but obviously the due date is filing before the ITR. That's where you file the safe harbor form, right? It is, again, let me clarify, when you are evaluating safe harbor, you need to first understand that what transactions, I mean, can your transaction be included in the safe harbor application or not? So there's a eligible transaction, right? And then after you can advise to the client for filing of safe harbor. You can also file after due date. I mean, you can go after due date also. That is, but obviously that should be accepted by the authorities. It's on all that. But I have seen also people filing after due date. Even Form 3CB also can be filed after due date, so that you can obviously, obviously before the order comes up, that is how it has been written. So, but still, ideally we try to file it before ITR due date, along with ITR, or, before filing ITR, so that that's actually a due date as per the provisions for filing of safe harbor applications, right? Thank you for drawing this attention, Pragya. Now, block TP assessment, this has not been started yet, obviously, but this how this will happen is that for 3 years you'll have to file an block year assessment application. Once your 3 years get completed, you will have that window to file a block year assessment, so that assessing officer can assess the entire transfer pricing positions for this 3 years in one time, rather than doing every year litigations. The assessment officer, that is transfer pricing officer, will do this block assessment for all 3 years at one instance only. So that is the concept of block assessment. It has come up in India last year only. But in mature jurisdictions, there are such concepts. Now India is adopting to such concepts. I'm not discussing much on this particular things because they are not applicable as of now. Now it will come into picture. Like, in the next year, they'll come into picture. SD documentation, as I mentioned, if your SDTs, that is specified domestic transaction, crosses beyond 20 crores, obviously you're required to maintain the TP report. You have to do the TP filings. Also, one of the more important, like when we are discussing about the SDT, when your client is entering into or has entered into any specified domestic transaction, that is the entity which is claiming, say, 115 BAB ka concessional tax rate or any sales exemption, ensure that you also do the filing with TP report. I have seen many cases where TP reporting is not done, like Form 3CB is not filed. And then after, once it gets into the eyes of the transferring officer, then, you'll have to file Form 3CB before AO order comes up, so that, you ascertain everything. But don't do that practice. If you know that your client is going to have the SDT more than this particular, if your client falls under this SDT provisions, then technically try to file TP report before the due date, that is 31st, 31st October, that is filing Form 3CB date. Ensure the reporting is made under Form 3CB, and you also do the TP analysis for the transactions. If any adjustments are to be made, please get it done in the books itself rather than under Form 3CB, right? So when it comes to SDT, you have to be very cautiously, you have to be very cautious and deal with situations. We also have right now I think two cases are there with us for SDTs only, litigations, right? Where officers are checking how the entire TP has been done, right? So that is also one of the area of practice. Then APA annual compliance report. So if your client has entered into APA, it's not only that he is waived off from the compliance. Obviously, he doesn't have to maintain the detailed, TP report, or say even if he has to maintain, but Form 3CB is not to be filed for that, and a different file, that is a declaration, has to be filed that they are complying with the APA agreements, whatever terms they have agreed into the APA, they are complying with the same, right? So this is how Indian TP thresholds and compliance calendar looks like. You can take screenshot, you can find it. Now use Claude also, to assess the dates and everything. And you can make your own compliance calendar for the clients also using Claude or Perplexity, right? Are we clear till now? Should I move to the next slide? You have any doubts? Let me now check the Q&A section. Was 11:42 हो गया है. Let me also check now. So the new sections are to be quoted from. In case you have any doubt, please, feel free to mention in Q&A box or chat box also. So the new sections are to be quoted from next year, right? For current year documentation purpose, those 92 section. Yes, so for current year, section 92 will be applicable when you are preparing report for financial year 25-26, right? Financial year 25-26 का जब आप filing करोगे, तो section 92 वाले provisions ही quote करना. Don't get into the new provisions, right? That will be from this 1st April, will be applicable. So for the next year, when you prepare TP report, whether using the brand name of other company without any capital shareholding connection, whether it's considered is. Now, this is a very typical point. See, I'll tell you, Sriram. See, technically in transfer pricing, none of the question may have a standard answer or standard approach. you have to understand one thing that so this was actually a case which happened with me when I was in EY Bangalore. What happened? There were two business group, right? Now, these two business group, out of which one business group only told that they will only provide technical know-how and a brand name, and the other business group was in India and they wanted to manufacture tires. So that one business group, told that they will provide the brand name, technical know-how, and will hold only 5% of, a lesser equity compared to the other business group, which will hold around 95% of equity, right? Now, using a brand name, you need to understand that what role will be played by that particular international group into that entity, correct? And whether that role technically creates control or not. So we dig deep out. We did a functional interview. We did an analysis, and we tried to understand the terms, how the entire business will run. Somewhere we were of the view that even holding of having of 5% equity, or even if not having equity only, but only providing of brand name and technical know-how to do the things, that could trigger a relationship because the mechanics were there. Like, there were function asset risk. We understood that part, but that doesn't usually happens everywhere. Like, for example, if you use McDonald's, if you take franchise of McDonald's, now McDonald's business is actually giving you the franchisee. Now that for that, every entity cannot be become an associate enterprise of McDonald's, because if they are using running a franchisee outlet, in that scenario you have to be very practical to say that with the third parties also you are doing the same thing, right? And all the parties are third parties here technically. So if your business model is such like that, giving franchisee, that doesn't create an A relationship. But in this particular case, where only two entities were actually joint venture partners, but they didn't wanted to hit TP, so that's where they did this particular structuring of not having the equity or having the less equity and then just giving the brand name. But technically, we come to know that okay, if one entity is, if one group is trying to control the entire operations, obviously it has the influence. Say for example, if you are regulating sales price directly or indirectly, right? That is what we call influence. If you are trying to say that, okay, buy, procure raw material from this particular person only, that is how the, one group is trying to influence the entire arrangement. That is how it creates, the relationship. So you have to be very broad when you think about it. But not for every franchise model you'll create a relationships. It will depend on case to case, situation to situation basis. Capital include debts also. Yeah, capital. So when we say capital control management, it includes debt also. Is it possible for us to benchmark the receivable payable with ALP? Obviously, it is possible. Why not? It is just treated as an advance. So there are two things, two, three things when you are benchmarking receivables, payables, right? First of all, if your receivables, how do you benchmark receivables? So first of all, you might have all have heard about the credit period, right? If you are giving a credit period to your associate enterprise, say for example, you have sold certain services or goods and you are giving a credit period of 45 days. And in that 45 days, you are receiving that amount. Now, the same credit period you are giving to third parties also of 45 days. Then obviously, if you are receiving the amount in that particular duration, then you can benchmark through that particular thing as well, that your terms with AE and actually what you have received is also complying with that terms when you do the same thing with the third parties. Receivable payables in the reverse way also, if you can say for payables also. So that is how one of the manner in which you can understand that whether TP adjustment could be there or not. If your receivables go beyond credit period, which normally people don't give, like consider that way, that if you are if you are giving any selling to the third parties, whether you would give that particular credit period or not. In a third party scenario, generally, 45 days, 60 days is a credit period. That also depends on relation to relation, right? In your taxpayer case, if he is giving a credit period of more than 60 days, 70, 80, 90 days, then obviously, someone would question that, right? That why you are giving a elongated credit period. On that particular portion, someone can charge, I mean, your officers will try to charge interest, which is we call notional interest, basically. It is just like providing a loan to any other entity, right? Beyond credit period, if it goes, obviously, that is how you evaluate the receivables and payables. There's also an approach for aggregating of transactions. So where you do working capital adjustment to your operating margin, and where you try to justify that, okay, if I adjust also my working capital when I compute my margin with the comparable companies, and I'm falling into that answer, then that is how also you can justify receivable payables outstanding transaction. So that is how you can benchmark receivable payables. See, in transfer pricing, whatever is more practical is to be documented and to be evaluated, right? All right. So should I move on to the next part? Yes or no? I think it's 11:48 and people would be hungry by now. So yeah, should I move on to the next part? Yes or no? I think attendees, if you are, if you are attending this, just respond. Only one, two people are active in the entire. I can obviously see, a list of attendees who are attending this entire session. Please be active. Please be interactive. If you want me to discuss anything with you, just let me know. I can unmute you on any particular subject. Obviously, not some irrelevant thing, but obviously on any particular subject. I hope this session is engaging for you, right? You are finding this entire thing interesting. All right. So now we move to the next part. Now comes the UAE part, where most of you would be waiting for, right? Now UAE part, right? Now what is UAE? I mean, what is UAE in a sense? What are the provisions under the UAE income tax or corporate tax law, right? So UAE, we don't say it's an income tax act. That is what we do in India. But in UAE, we say as CT law, right? Corporate tax law, and it's a federal decree number 47, law number 47 of 2022. That is the CT law. That is where it's a federal decree, because UAE, as you know, it's a combination of emirates and where there are rulers. It's not like us, our democracy. It's a where there's a ruler who rules the entire country. So that is where they have a federal decree, law number 47 of 2022, and that is how they have implemented this particular legislation, this particular provisions, right, under UAE. Now, if you see here, now this is important. If you see here in UAE, unlike India, now if you see in India, there are many sections for applicability, for computation of ALP, then documentation, litigation, etc. Right? If you see in UAE, there are predominantly three particular sections. Obviously, there are four actually. Article 55 is also there. That is for documentation. But if you see here for applicability and assessment and not assessment but applicability and evaluation, they have this particular three articles is what we say. They are just like sections only. But these are we call in UAE article. What is that? Article 34, which discusses on arm's length principle. What is AL principle, and then obviously what is the computation mechanism, etc. So that is being discussed. What are the methods which are there under the transfer pricing provisions, that are all discussed under article number 34. And then you see for two articles, they have just explained that what are related parties and what are connected persons. So now in UAE there's a concept of connected person also. In India, we saw that there's only one concept of A, right? We do have related party concept, but that's for other provision, for TA to B, right? That is not the thing which we are discussing in UAE. In UAE, there's a concept of related party and connected person, right? Now we're going to understand one by one each everything, right? Now, if you see here, Article 34 technically discusses on arm's length principle, right? So, what is arm's length principle? In a very basic sense, if you are doing a transaction, if your client is doing a transaction with its related party, in a control scenario, if the same transaction would have happened under uncontrolled scenario, right? What would have been the price which would have been charged for that particular transaction? That is what arm's length principle is all about. You can check the definition, detailed definition under the OECD's guidelines. Are you guys aware about OECD guidelines, or should I show you also the guidelines? You can download it. It's freely available on the internet. Do you want me to show you OECD guidelines? Yes or no in the chat box? Okay, I'll show you the OECD guidelines. Just give me 1 minute. I'll have to stop sharing this. I'll just open the OECD guidelines. Please download OECD guidelines. So yeah, I'll tell you what you should download also. Let me first mention in the chat box that what you should download so that you can learn TP in more detailed manner. OECD TP guidelines. These are the, you can say, Bible for TP sort of thing. Then UAE TP guidance, that is called CT, CTGP, GPT, GTP, sorry, one, right? So this is UATP guidance. Then you should also read Singapore. See, in my YouTube channel, I have mentioned everything. You can also go to my YouTube channel, The Learning CA, where you can find many stuff on transfer pricing. Singapore guidelines also you should read. You should also read Australian guidelines. If you want to learn TP now, apart from India, these are the very good guidelines which I am mentioning on the chat box. Let me also open OECD and UAE both for you so that you get that understanding. TP guidelines, yeah. Okay, this is how. Yeah, let me share that. Yeah, guys, I think you guys are able to see this OECD TP guidelines for multinational enterprises and tax administration. This is a 2020 publication. उसके बाद I think there is no update. I think 2025 में शायद update आया था, but there were not much changes to it. But you can. This is I think available on the internet. This can be referred, for your TP analysis basically. Right. We do generally quote. There is also UNTP manual. Sorry, I missed to mention that. UNDP manual for developing countries. That is also very good source of where you. It's a very practical guidelines. Like it's very easy to understand. UAE also I love much. UAE guidelines. So if you see here, these are all OECD guidelines. Here where the arm's length principle का पूरा detail में concept has been given. You can read it, right? So arm's length principle is given. Then if you see here, I'm sure you guys are able to see the screen, right? So if you see here, transfer pricing methods. So how do you, first of all, obviously you will see the applicability part. Then you will come to computation, which technically covers methods, etc. Which method is most appropriate method. And then after, there are also special transactions like, intangibles, intergroup services, business restructurings. There are specific guidances into this. So if your client is into this, but is facing certain, facing this type of transactions where you are required to do TP, you have to refer these guidelines and accordingly you have to arrive at arm's length price, right? So this is how you do comparability analysis, timing issues, how you deal with certain issues here, cost contribution where there are two entities which are contributing to developing of same intangible, then how the same is to be treated. If you see here, the concepts are given. So this is how the guidelines are there, right? Now let me also show you the UAE TP guidelines. So this is UAE TP guidelines. This is also one of the very good guidance, there where they have given the examples. And in India, we don't have such guidelines from government authorities because government doesn't want to, close on anything. In India, the government wants to keep everything open. Only we have to refer rulings through which we can understand, okay, this is how the things are to be done. Except for safe harbors and certain things, government has clarified certain things. But still, when it comes to Indian TP, I don't basically, I personally refer OECD first. Obviously, I have to first refer Indian rulings to understand the concept on the India part. And then after, if any reference is to be made, I can go to OECD guidelines to understand how the entire thing is to be undertaken, right? How the analysis is to be undertaken that way. Right? So this is how TP guidelines are there for you. You can read that, right? Now coming back to our PPT. Now, if you see here, arm's length principle, right? So, all RP and a correct personal transaction must be at LP. Now, this is where UA clearly says that you might have seen about, UA technically. Okay, sir, at the end of the session, I just got one question. At the end of the session, do let us know the international opportunities in TP apart from UAE and how likely those will continue. Yeah, we can obviously discuss that. And don't worry, AI won't replace you, but technically you will have to use AI. The famous sentence, the people who are using AI won't be get replaced. It's not that. It's not factual part. I personally believe AI will replace everyone at the end of the day, but you have to be updated with yourself. Obviously, it cannot replace human judgment, right? Because still AI cannot replace human judgment at when you are going before the officer, when you are filing the forms with the government authorities. Obviously, a human intervention is required in that point of time. At this stage, AI is doing that, but at least automations will, are have been already started. We are itself in our firm also. I can show you. We are automating certain things so that we can scale at a greater level and we can serve more clients and we can make money that way, right? So that is how the our intention is. But yes, you would require to understand this particular skill sets because when you are advising client, now client will not come to you just for filing tax return. They will expect that you provide some valued services to them. Say, for example, valuation, whether you can bring more funds to the client's business or not. These are certain problems which clients are facing and are now expecting from CA that, they can, CA needs to help and draft the accounts in such a manner that they don't face any future risk or, they don't face any much more litigations. So accordingly, in every area, now you have to be very sure that you are providing value to the client. Only then you'll be able to charge fees. Else you'll be able to charge the fees, but at a very lower. You'll end up doing the lower fee work. Like every work is. I don't consider any work high or low, but at least the fee part, free from the angle of fees. Obviously there are certain things which may get entirely replaced by N, where you may not be able to charge more fees, right? So arm's length principle, all RP and connected person transaction must be at ALP. In UAE, every transaction must mill. So every transaction undertaken with related party or connected person should be at arm's length. That is what the clear principle is, and that is where all consultants do follow this. The consultants don't tell to the client that okay, let us not do TP. They will always try to tell the client that let us do TP so that they can also earn the money, and the client is also safeguarded, obviously. First, that thing is into the mind, because even tomorrow if any consultant gets any case from the client, and client can sue also consultant that they have not guided them properly. So every consultant is also understands the importance of doing this analysis. So UAE is a very big market for TP, but obviously compared to India, there are less number of companies in UAE. Even in India, we have big population, big huge number of companies being registered. But in UAE, obviously the market is saturating right now. Still, competition was there from day one, but still, market, we were able to enter into UAE market last year. This year, if you want to enter into UAE TP market, either you need to have a UAE TP practice, UAE TP expertise, or probably you need to collaborate and you need to with some TP expert. Like how people do collaborate with me is that most CA firms, they collaborate with us, and then we ensure that TP is done in their clients. That is how also they sell TP to their clients. So that is how the market. Obviously, competition is going to be there today, tomorrow, day after tomorrow also. So there's no bar to it. But yeah, if you learn quickly, it will benefit you only. So there are five OECD methods under Article 34, which has been given. Alternative methods, as is less like what we have in India, another method. They are there. FTA can adjust taxable income upward or downward for non-LP transaction. Downward adjustment requires prior FTA approval, right? So in UAE, if you see, especially in India, there is no such mechanism of downward adjustment. So if you file your transfer pricing, the Indian law technically doesn't allow us doing downward adjustment if it reduces the tax liability. In UAE is the other case. They do allow downward adjustment also, but only you are required to get the approval of FTA. Now, practically, FTA approvals have not been started when it comes to downward adjustment. So, for the cases where downward adjustment is to be done, people are doing nothing. Like, people are just, because it's a first year only of UAE transfer pricing. So, many loopholes are there under the mechanism, under the law, so that they have to clear out so that, this all things can be implemented. Right. So that is what Article 34 is all about. ALP, it's a detailed article. You can read it. As I mentioned, there's also a guide of UA transfer pricing, which you can read. And then from there, you can understand that what things are covered. Basically, applicability of transfer pricing would be governed. As you have, if you know Indian, as I explained in Indian part also, the same thing would be applicable in the UAE part also. Fundamentals, right? Then Article 35, 36, obviously important. Article 35 introduce you to the concept of related parties, which is wherein you are required to have a 50% threshold. Unlike India, it's a 26%, while in UAE, if you see, it's a 50% ownership versus India's 26%, right? Then natural persons till fourth degree of kingship creates RP relationship. Now, so what is fourth degree of kingship? That is, your grandfather, then your father, then you, then your daughter, son, etc. Then your father's brother, that are also covered, and your father's brother's son is also covered. So that is how fourth degree of kingship creates happy relationship. That is how related parties have been defined, right? Then common government ownership alone is not equal to related party. Okay, that's a clarification where two government entities cannot be considered as a related party. That's but obvious thing. And significant influence also triggers RP status. As I mentioned, even they are mentioning 50% everything, all these things, still they will keep certain areas open. Like, significant influence also creates TP or RP status. Now, significant influence has not been defined. Significant influence should be there, right? So every law, if you see UAE, India, other also Singapore, US, they will try to keep certain areas open only in TP. That is deemed to be understood, so that they can include any other cases also if that comes up, and that's why a genuine relationship is getting triggered, right? So they can keep that area open. Again, there's a concept of connected person. Now, here they are individuals. If you see here, related party contains individual and natural persons. Both the types of parties are covered under related party. But when it comes to cover connected person, they are all individuals only, natural persons basically. They are directors, shareholders, and officers are connected person. Even if any company is paying to director, say, most famous thing right now in UAE is to benchmark a manager remuneration, right? People are coming with us for manager remuneration benchmarking. What is that? Basically, a company is making payment to directors, say for allowances, for salaries, etc. Still, they are required to do benchmarking on that transaction. So we are also using certain means and methods, and we are documenting that. If you see here in the TP report which I opened, sample report, there was this transaction also. Let me show you if I'm able to open that. Yeah, if you see here in the report, this was the TP report. So if you see here, we have tried to benchmark this transaction also. Payment of managed remuneration to connected person, right? So in the UAE. So then we explained that, what that person is doing in the company, etc. What risk company is taking. It is, I have just removed certain part from this report just to, keep the confidentiality. We cannot share client information that way. But this is how we have tried to, document the transaction and justify the ALP. Right. So these are called connected person. Non-ALP payments, again, you have to then, you cannot get a deduction from the taxable income when your payments are not at arm's length when it comes to payment to connected person. Then no equivalent concept in India's transfer pricing law. In India, technically there is no domestic transaction concept except it crosses 20 crores and there are certain conditions to it. So that is how we are trying to compare with India. An exception listed companies and plus entities regulated by UAE authority. So you see here exception listed companies because listed entities may have independent director, right? So similar way, when the payment is made by a listed entity to the independent director, that is not required to be benchmarked. But with a director who's actually acting for the company who's not an independent director, then obviously that is covered. That particular transaction is covered under the ambit of UAE transfer pricing framework, right? Clear till here? Should I move ahead? Well, let me check the question. At the end of the session, do let us know international opportunities in a TP apart from UAE. Yeah, sure. I will discuss. Yeah. So rest assured. All right. Should I go ahead to the next slide? I know it's 12 p.m. almost. Even I am, feeling bit hunger. Yeah. But yeah, we'll try to complete this. And I think not much things are left now. We have to just, discuss certain more aspects to it. Right? Clear till now? Should I go ahead? Are you guys with me? Yes, no? Sir, mute पे तो नहीं चलेगा ना? Okay. Does this mean that salary to directors has to be at ALP? Obviously, salary payment to directors by the company has to be at ALP. Company has to also report that transaction if it crosses certain limit. So in UAE, the limit for reporting is 5 lakh dirhams, like 0.5 million dirhams or 500,000 dirhams के ऊपर जाता है payment to directors. You have to do the reporting into city return. You have to benchmark it. Yes. All right. Should we go ahead? Yes. No. Yeah. So obviously in UAE also, I'll tell you there are other things also. The CT rate is 9% on income, which is greater than AD 375,000. That's a CT rate under UAE. For certain qualifying free zone persons, there is 0% tax on qualifying income. So that is where they are also required to ensure that the free zone entities do meet TP criteria and ensure that TP policies are there for free zone entities. In case if they don't comply with TP policies or TP, if they are not able to justify the ALP, then technically their free zone exemption is taken by the authorities, and then they have to pay tax in a normal manner only. Just like 375,000 se upar ka income hai, so they have to pay 9% taxes in UAE. Right, an APA program is launched already in UAE. Right now, they have also enabled on MRA portal the APA filing things. Like domestic APAs are open for UAE filings. So UAE taxpayers can file for domestic APAs also. As I mentioned, APA, that 25 lakh, 30 lakh opportunity, now it exists in UAE. Right. Now, India versus UAE have tried to compare the framework. Like, if you see here 26%, 50% difference, then kingship proof, there is nothing rule like there in India, while in UAE you have that particular rule. Connected person concept, not equivalent, but directors, shareholders, officers are there in UAE. Then domestic transaction SDT only, more than 20 crores. That also specific SDTs, not all SDTs. There's a different SDTs have been defined well under the act, while in UAE there is no definition only. All domestic RP transactions are to be benchmarked. Then free zone transactions not applicable in India, while free zone to mainland specifically covered. Documentation trigger aggregating that are more than 1 crore. Now, if you in UAE, you see the local file is to be maintained for more than 200 million or where or I mean, or RP transaction, it's wrong. Like, for revenue more than 200 million, if any entity has more than 200 million dirhams revenue or 3.15 billion dirhams revenue, they have to maintain a local file. If and that also for certain transactions which are to be covered. But what we are doing in UAE is, because as we are required to do TP on every transaction in UAE, we are trying to also prepare this document called audit ready TP report, which is almost like a local file. In local file, you add certain more things as per the requirements, but the conceptually the things will be same only. Functional analysis, economic analysis will be same only in UAE also. So technically, while you are required to maintain local file in UAE, we also do maintain audit ready TP report, which is at the time of tax audit, if comes up, TP audit if comes up by the authorities, then we are able to produce that document, right? So that is what the thing is. Annual filing form 48 in UAE, there is CT return. So there is a disclosure form, like disclosure schedules in CT return. Related party disclosure is there, related person disclosure is there. As I mentioned, that beyond certain thresholds, that is disclosure under UAE, I think will discuss more in the coming part, the disclosure norms when it comes to UAE. But this is how the framework has been distinguished between India and UAE. Clear till here, you can read the entire thing. Then we can go ahead, right? Yeah, clear till now. Should I go to the next slide? Yeah, all right, all right. So now the next part, the most important part, right? Okay. So this is, I think, the final technical thing that we're going to discuss today. Obviously, I think the session was a bit heavy, but still, we'll try to understand it, and we can discuss tomorrow also this thing. We can continue our discussions on this also tomorrow. Rest assured, we'll start with a recap only so that we can again clarify certain things. Now, five OECD transfer pricing methods which are applicable in India also, which are applicable in UAE also. Right, we are not talking about the other method right now. Obviously, that's also sixth method, not a method, but sixth way, which is open way, which is available in case if you are not, your case is not falling under these five methods, you can have the six methods to, for implementation. Now, if you see here, what is the first method is cup method. So when do you use cup method? When you are transacting in commodities, products, finished goods, etc., or royalties or loans. That is where you will try to use cup method, where will try to compare two products, same products, that is two transactions, that is one the sales which have been made to end, one the sales which have been made to the third party. I'm just giving an example here. That is where you use cup method, where you there are two identical transactions which have happened and which can be which are totally we same to each other. So for example, you can compare an apple to an orange. You cannot, right? It has different characteristic, different applications, right? And different nutrition value, right? But when you are selling the apples to one entity which is related party, and you are selling the same sort of apples to third party, that point of time you can use a cup method to assess the value, considering the fact that they both are of same quality, same size, or even not same size, but a very minor difference in the size and structure, etc. So in that cases, you use cup method, right? So that is how you use cup method. There are many cases for that, like many where, but the understanding is that the product should be comparable to each other, right? Product or service or whatever you are trying to compare should be not exactly also, but 99.99% should be compared, can be compared with each other. So that is where we use cup method. So that is where it is a traditional method, is what we say generally. Traditional type of method. Then there is RPM. What is RPM? It is resale price method. Resale price is basically when you buy a product from your, say, related party, and when you resell that into the market, that is where you try to maintain a gross margin. So that is where resell. You are not adding any value to it, but you are just buying it and you are reselling it. Most of distributor models in India, you might have seen, we are benchmarking through gross profitability, which is under RPM, where we don't add value. We, in the sense, distributor client don't add any value to it. They are just taking the goods, they are taking the consignment coming into the warehouse, and then they are dispatching the same to the customers. So in that scenario, resale price methods can be considered as most appropriate method, right? Then comes the cost plus method. Cost plus method is basically where you are trying to add a value to that entire product or service, and where you are comparing the gross margins. That is adding direct cost, purchase cost, and differences in inventories, and then you are trying to justify the gross profitabilities. That is what cost plus method is. In India, I have seen very less, in almost hardly 0.1% cases CPM is applicable, where you have internal data to compare. Else, we don't apply CPM when we are comparing the margins with the external parties, external comparable entities. Why? Because in external entities, you technically don't get the data of direct cost accurately, which you can get in your tested party. So when we are comparing margins under cost plus method, right, we are not able to get data from external. See, now also you need to understand one thing. There are two different concepts. Let me put in chat box also. So cost plus method is a TP method, right? While cost plus markup, you might have heard about it, right? It's a remuneration model, not a method, right? These are two different things. Don't combine into one thing के आपने कहीं पे सुना है कि कॉस्ट प्लस 5% या कॉस्ट प्लस 15% लगा दो, तो वो कॉस्ट प्लस मार्कअप होता है. 15% इज अ मार्कअप, राइट, और कॉस्ट प्लस 10% इट्स अ मार्कअप. इट्स नॉट अ इट्स अ रेम्यूनरेशन मॉडल. इट्स नॉट अ मेथड, टीपी मेथड, राइट. कॉस्ट प्लस मार्कअप इज नॉट अ टीपी मेथड. टीपी मेथड जब बात करेंगे कॉस्ट प्लस पे, तो कॉस्ट प्लस मेथड will technically involve gross profitability, not the net profitability, right? So that is where also we use very less cost plus method in cases where we are required to do an external benchmark, right? So technically in that scenario only we do TNMM. That is the next method. If you see here, net margin method. यहाँ पे we compare net profitability. Could be one of the indicator. The most common indicator that we use is operating margin percentage. OM percentage लिखा है यहाँ पे. That's the most common indicator where you compare, where you try to compare the margins of the your client entity or tested party. Let me put it that way. Technical tested party. Who's the tested party? The margins of the entity which you are testing, right? So your tested party's margin, which most of cases would be the client entity. So your margins of tested party, you are comparing with the third parties. So that is where you use TNM method, right? Transactional net margin method. It itself says that it deals with net margins, right? It is generally used where you are not able to apply all these three methods. That's where you are, and also the PSM method. You, if you're not able to apply these four methods, and still you are required to benchmark a service transaction or normally your operational transactions, then you can go for transactional net margin method. Now, I'll also tell you that there is no standard approach in adopting any method. You need to understand that what is the most appropriate method in your case. It will depend on case to case basis. Say, for example, if there are two entities doing the same business, sort of business, but they may have certain different arrangement with their A's, right? And the data availability is also one of the more important factor. In one entity, there is a data available. In another, there is no data available only. They are not required to maintain certain detailed data. Then also your methods get to change. Both the entities doing same business, same industry, etc. Still, in one entity, you may apply other method. In other entity, dealing with other other client entity and other client entity, you can use other method. Different methods in both the cases. You have to understand that what how you have you have to assess that what data is available, and appropriately what method you can go ahead with, right? And then after, profit split method. What is profit split method? When there are two entities who are working to develop a same product, right? Same service, or they are rendering same. So, I mean, where they are not same product, but they are jointly contributing to develop the same product, or they are jointly rendering the services to the third parties. In that case, we use PSA. I'll give you an example for using profit split method. Because in this cases, both entities are acting as a joint ventures. They are not a parent employer-employee relationship. They are both joint venture partners, not in a legal sense, but in a technical way, where both entities are contributing to the development of that intangible. That is where profit split method is to be used, where you technically understand the contribution being made by these two entities on number value, obviously on numbers, and then you are trying to split the profit according to their contribution. That is what we call profit split method. The name itself suggests, profit split. So these are all five methods. In case if your transactions still fall outside this method, we are not able to, use any of these methods, then there's also a way for other method, which UAE and India both have given, right? Alternative way. Any questions to it? Anything you wish to discuss on this part? So tomorrow, once when we take the case studies are tomorrow, once we take the case studies, I'll be also explaining that what is the most appropriate method in that particular case study. But you have any questions right now? Want to discuss anything on this particular methods? Anybody in chat box or in Q&A section? I think I have resolved all your queries, except one query is pending that we'll discuss at last. What does most appropriate method could be gained through experience only? No, no. So experience is fine. Like, obviously, by experience, you'll be able to give more mature advice to your client and the methodology to the client. But it's not about the experience. It's about technically how you are evaluating the entire case. Now, let me show you here only. Now, it's best to show you that how we have evaluated the methodology. It's very interesting, actually. So this technically establishes that with whom you are working as a TP consultant, right? There are many TP consultant, in the market right now who tell that they know TP, but eventually they end up doing mess in the accounts. We have seen many number of cases in that case. Where TP firms are not equipped with expertise, and then obviously you have to understand the things that when you are dealing with clients, you have to be very cautious when it comes to TP, because even a minor adjustment could lead a bigger tax payment from client. Now, if you see here, when I'm benchmarking this transaction, it is something purchase of goods from an associate enterprise. Now, if you see here, which with entity which I have considered tested party, will tomorrow learn how to do functional analysis. But today I'm just trying to say that which entity we have considered this as a tested party. Then what is the data which is available? Now, if you see specifically in this case, the data was available, internal data where I can do cup method. But problem was that the volume and the unstructured nature of records make it practically challenging to perform complete analysis, as also it would be difficult to undertake reasonably accurate adjustment to eliminate product pricing differences. So that is where I'm trying to reject cup method technically here. So I'm trying to comment on data first, that whether internal data is available, yes or no. If it is available, then it is very unstructured. Right. So tomorrow someone asked me, did you check internal data? Yes, we checked, but it was not, we are not able to, just carve out the entire analysis only from that. So it was available, but still we are not able to justify that. I mean, do the workings on that. So then we relied on external data. That is, we took an analysis on the external database. Generally, we use TP Catalyst when it comes to UAE. So external data, comparable data, that is companies that are engaged in similar business as being undertaken by this particular client company and can be inferred from the identified from the commercial database. Now, if you see here, selection of most appropriate method. First, we have written the method, and then we have given a detailed reason why we are rejecting this particular method. This is our way of presentation. Some other firms may present their way. People have also write 5 to 10 pages for just rejecting the method. I don't know why they are putting that all things in TP report. I mean, I personally believe that you should not. You should keep your TP report very smart way. You should not open all the cards at one point of time. You should try to put arguments in a manner, so that will come only from experience. You should put arguments in a manner. In case the case comes up, you should be able to tell better way. You should open cards at that point of time. That should be the strategy to make TP document, right? So that differs from consultant to consultant. Like, probably they may have, other consulting firms. I have seen 4 to 5 pages. They are just talking about the methods. No need for that. Like, you have to just be a very basic, simple thing. People do understand, right? Officer is not a dumb guy. He's also able to understand TP, right? So you need to understand when you. So this is the reason which we have given for this particular case. And even though there is comparable data available, but how we cannot use that, why we are not using that data, the reason for that, right? If you see here, then I have written here RP method. We have assessed that, and why RP is the most appropriate method in this particular case, because obviously it was engaged in distribution thing. So that is where RP is there. Then CPM, cost plus method, why it is not being applied. Then TNMM. Now again, if you see here, in TNMM, I have tried to also refer OECD guidelines, etc. And we are using this method, but as a corroborative. So primary method is RPM as a corroborative method. So as guidance doesn't restrict us to use methods. You can use 3 methods at a time. But what is the most appropriate? That is, first method is RPM. And then after, as a corroborative, we have used this particular TNMM method. So first is our argument would be RPM and then TNMM, right? So that is how we have given the reasons. I hope that clarifies, right? Yeah. Any other questions you have? Let me check Q&A box. Yeah, just a second. Does most appropriate method can be okay? I have answered. I think there was one thing in chat box. I think manager remuneration, which method is used? Okay, for manager remuneration, generally we prefer to use other method referring to the salary guide, salary references. See, manager remuneration right now, see, in UAE, the problem is that There are no litigations which have happened in UAE or closed in UAE which can be, discussed in the public, right? What people are doing is, what consultants are doing is, in UAE, there are three more main arguments people are taking. Obviously, there are means, methods, databases. There is no standard approach, first of all, when you are doing transfer pricing. But when you do TP in UAE, we technically quote three methods. We argue on three methods, and depends, if we are able to argue on three method or two method or one method, right? It depends on case to case basis. There is nothing standardized. Let me tell you that. Now, when it comes to UAE part, there are three arguments. First argument is that no, we refer to the salary guides, and say, for example, if the company pertains to, say, FMCG industry. In FMCG industry, what are the generic rates which are being paid to a director or manager level person? We refer to salary guides for that. Specific salary guides are there. We refer to that, and appropriately we try to. Let me show you that also. We have used in this case also. I presume it might be there here. So that is the first thing that we do is other method. We don't go with any benchmarking based on PLI. We go that I'll show you that also, but that we take as a corroborative part. So if you see here in if you now in this client was basically to pertain to engineering and manufacturing, where we are benchmarking, and he was a CEO or MD only level guy. So if you see here, we have tried to show the compensation rates from a salary guide which we have referred here. So that is one of the way we try to justify that, okay, if a monthly salary of 80,000 dirhams or 1 lakh dirhams, say for example, has been paid, then obviously, that fits into this case. So that is one of the thing where we do in UAE for benchmarking manager remuneration. The second argument that we take is here, employee cost to operating cost. So the total employee cost, including indirector salary, compared to operating cost of the tested party. So if you see here in tested party, we had computed. So yeah, right now the figures have been removed. But if you see here, it was 5.14%, and which was within, no, no. So if you see here, the arm's length range, let me just do this. So when we compute EC by OC, the arm's length range is 2.97%. Let me just do this. I hope you guys are able to see the screen. So if you see here we have tried to compute the employee cost to operating cost of the comparable. These are all comparable entities, right? Which are engaged into same or similar line of business. If you see here, the range comes from 2.97% to 5.16% with a median of 4.17%. Now in our client company, when we computed, it came to around 3.10%. See, so 3.10%, that is employee cost to operating cost ratio. So 3.10%, which falls under 2.97 to 5.16%, that can be considered at an arm's length. Same way, that is the second argument. Now, what is the third argument? Third argument is, because my remuneration has been debited into profit and loss, I am also trying to justify through profitability ratio. So for my the profits which the comparable entities have earned. So if you see here, the profits which the comparable entities have earned ranges from 3.71% to 13.72% with a median of 7.73%, right? This is the data set. Now, if you see here, if my client entity has earned a profit in this range, which is 5.14%, which is in range of this, then also we can justify. So these are the arguments that we are taking to justify manager remuneration, right? I hope this clarifies, your question. Yeah. Yes, salary guidance is available publicly. You can refer many salary guides for UAE in Saudi. They are all available on public database. Right. For every year you have to follow, you have to ensure that your salary guides are updated. Like you cannot use 2023 salary guide for benchmarking 2024 transaction. Right. Yeah. Any other questions you may have? If you want me to unmute you, I can unmute you if you want to discuss anything, or I can go to the next thing. Okay. So we have one question again. How do we use RPM method practically? Yeah, we can use RPM method, but the only thing is that it will depend that what is the characterization of your tested party. What is characterization? Basically, your tested party from the functional analysis, it is able to justify that it is a normal distributor, routine distributor or not, and they are not adding a much more value to the business. Like for example, I'll give you example for RPM. Assume that there's a US company which manufactures medical devices, right? Now, those medical devices have global patents and they cannot be produced anywhere else except the US factory. Now, US entity has established a subsidiary in India for distributing its product into the Indian market, right? They want to sell globally. So when this type of arrangement comes up to us, where Indian entity is just doing marketing and nothing more to that. Even marketing also, they are getting the contracts and etc. And then they have to supply the medical devices. So in that case, we have tried to apply RPM because that is more suitable, because Indian entity is not adding any value to the product manufacturing. They are just taking the product and then they are supplying to the customers, say could be hospitals in India or clinics in India. So in that case, you can apply RPM. Again, in apparel industry also, we have seen much more like, one entity is sourcing apparel and then selling in the market. Say, for example, there's an Adidas. Now, if you know, Adidas does not manufacture footwear. So they just source the footwear and then they pass on to the India market. So that is how it is done. Like, at a global level, if you see for such big groups where distribution wings are there in India, not only big groups, normal also. That's where you try to use RPM method. But then you have to understand one thing. I am not selling to my related party. I'm selling to third party. I'm just sourcing for my related party. That is what the arrangement should be. Now, if it's a reverse case, when I'm sourcing for my related party and I'm taking from third parties, at that point of time, I won't try to apply RPM because I'm acting as a sourcing agent for my related party. I'm trying to test the goods. I'm trying to also understand the goods. So that adds value to your final delivery, right? So when I'm sourcing for my related party, I won't try to apply RPM, but I'm just distributing the goods of my RP in India. Then I can apply RPM. You got the point? So you need to understand functional part, what you are exactly doing, right? The nature of transaction and the value chain, basically, where your entities, your client entity is playing the role in value chain, right? All right. Now, should we go to the other part? Like, I think we are short. We could be short on time. I'll just try to get into the other part. Like, as I mentioned, that arm's length range, India versus UAE. Now, as we saw the methods, then after obviously we saw the comparables. Like I show you the list of comparables. Right? So there's a concept of range when it comes to India and UAE. Right? Now, India has its own concept of range where we try to. So, what is range basically? Range is basically where you determine a range that is lower value and higher value pertaining to that range. And in that range, so why it is there? Because obviously your client entity is not that way exactly, could be considered as, I mean, if it is considered as comparable, but the earning which is doing, obviously it cannot be exact a point or number. In transfer pricing, it's an economic analysis, right? Where you are judging the things, right? And in your judgment you can be थोड़ा आगे पीछे हो सकता है, and that is where government has also tried to provide that range concept, right? So range concept is basically where you fall. So if you see here in the example which I showed you earlier, so if you see here, we have tried. So this is from UAE perspective. In India we have a different concept of range. You can obviously read regulations detail में बाद में, but understand this is a data set. Now technically we call this as data set, right? In data set there are, says for example, 20, 15 20 comparables. If you see here, there are 15 20 comparables. Every comparable have different margins, right? But these are all comparable entities, right? So when we do evaluation, then the step is to understand the range part. So if you see here, there's a range part which is there, right? So if you see here, the lower quartile and upper quartile, this is a range as per UAE guidance. I'm not going too much technical into this part, but this is a range from which, in case if my client is earning this much margin, or whatever PL I am using here, if it falls under this range, then I can be considered to be at arm's length. So how I derived range? First I arrange the comparables, and then appropriately by giving the formula of quartile and that is 25th quartile and 75th quartile, we arrive at this particular range. That is the concept of range. You can obviously, there's much more to explain to it. If you go in detail, obviously, again, you will take around 1 hour. But this is the concept of range. When it comes to India, there's a specific guidance of 35th or 65th percentile range, while in UAE, it's a 25th, 75th. So UAE provides you a broader range and very formula based range, interquartile range, while in India, it's much more restrictive. Like, if you have more than six comparables, then only Indian government tells you to go into range. If you have less than six comparables in the data set, say for example, in the example which we saw, if we had only less than six comparables in India, we had to average it out. We didn't, then the range is not applicable in India. If there are less than six comparable transactions, comparables here in this table, right? So India has more restrictions on how to arrive at arm's length price vis-a-vis UAE, which is very broadly because UAE law has been most part under UAE has been referred from OECD. They already have a OECD guidelines in place. So that's where India mein to the law was it's a 20 years old law, while the range concept came around 2015 में or 2014 में the range concept came in India. So 10 years still, range concept is 10 years old in India. Then obviously stricter than OECD, as I mentioned, reduces litigation ambiguity. Then outside range, adjust to median. Obviously, if your percentage falls outside the range, then what you have to do? You have to adjust the price to come to median. Now in India, what we do is we don't adjust it. If your profitability is more than this range, we don't adjust it. We tell that this is arm's length. But when it comes to UAE, we have to adjust that margin so that we fall under this range only. Now, you cannot go beyond range when it comes to UAE. That is in general practice. Obviously, in genuine cases, we then have to accept whatever the thing is. But when we don't propose adjustment, it's an economics of the company, right? If some companies are running much more beyond the range and still they are dealing with related party, because it is they have that intellect to earn money. I mean, you cannot surpass a commercial prudence in any case, right? A businessman's skill set, you cannot surpass that. I mean, no economy can justify it, right? So, new section 165 clarification, plus minus 3% even for single comparable also, that is applicable. Good. Trading transaction. So, what is tolerance range? So, even in case if your margin is above range or is not falling within that range, still you can assess that for plus minus 3% on the transaction value, not on the range, right? So, I'll just give you an example. If your value of transaction is 100 rupees, you are benchmarking that through a profitability ratio, right? If you are benchmarking that through a profitability ratio, that is through this particular methodology where you are comparing the profitabilities, right? Now, your plus minus 3% is to be computed on the transaction value, not on this particular plus minus 3%. इसका नहीं करना है अपने को. हमको ट्रांजेक्शन वैल्यू का इवेल्युएट करना है प्लस माइनस 3%, राइट, ऑफ द 100 रुपीज ऑफ वट एवर ट्रांजेक्शन वैल्यू, उसका प्लस माइनस 3%. इफ यू एडजस्ट, इफ स्टिल इफ दिस फिगर फॉल इन रेंज, देन यू आर एट आर्म्स लेंथ. दैट इज कॉल्ड टॉलरेंस बैंड, correct? But if you do plus minus 3%, still your transaction, your final outcome doesn't fall under this range, so फिर obviously you have to make the adjustment. So that is what the concept of tolerance band is about, right? In UAE, there is no such tolerance band concept, right? Unlike India. Then in UAE, you have a safe harbor only for one transaction, which is low value added intergroup services. There are no safe harbors in UAE, while India, there are many safe harbors, transactions which are eligible for safe harbor. For example, rendering of IT services or contract development, software development services, automobile manufacturing. You have eligible transactions in India for safe harbors. Contract manufacturing for automobile components, etc. There are many safe harbors in India. You can read the list. Providing of loan, giving the guarantee. I think given guarantee, I'm not sure, but providing of loan is also there as a say under this eligible transactions. These are certain key things that you can obviously read. Now, identifying TP opportunities. Someone asked me, how do you identify TP opportunities in your client base? Barabar? Now we understand that the hidden advisory revenue sitting in your existing client portfolio. Now I hope I have clarified that where TP would be applicable, how the TP is to be dealt with, right? Even a day two is pending, but someone said to me that opportunity. How do we identify the opportunities, right? Now technically, if you understand, there are many opportunities which may lie and which may be missed out. I have seen CAs missing on filing form number 3CB since 10 years in a client entity. Now that is an opportunity, right? You had to tap that opportunity. So what you have to do is, as a prudent consultant, from now onwards, try to see financial statements, try to understand the structure, try to understand what arrangements are there, which your client entity is doing with the lead party. Most of now, right now in India, the trend is that people are opening subsidiaries out of India, right? From that particular thing, what the transactions that they are taking, what arrangements that they are doing from that subsidiary, and whether Indian companies involved in that directly or indirectly or not. That is how you can find the TP triggers. If you see here, I've tried to list down all the things. Financial statements are trigger hota hai. Management fees are being paid, technical fees are being paid to group companies, royalties, license fees, import export. All such things are to be cautiously you have to review it. If your client is saying नहीं ये तो मैं normally कर रहा हूँ, don't agree to it. Understand the entire value chain. वो क्या कर रहा है client उसके अंदर? Because client is not a technical guy. You are a technical guy, right? Guy or girl, correct? So you guys are more technical. So be more technical. Try to understand the financial statements. Obviously, for eligible clients, like you don't need to check for local clients who are doing local operations, but for the clients who have good turnover, say for example more than 1, 2, 3, 4 crores, 5 crore turnover. Obviously, they are again a tier three limit turnovers, but still in their case, if they are expanding more, and you have to control as a CFO, if you are providing CFO services or if you are doing auditing, you need to ensure that you control everything properly in that financials. You have an eye for everything, so that at least nothing is missed from your end, and then obviously you can tap the opportunities. Say group structure signals like holding company, international tax. If you want to do structuring, cross-border structuring is being done. If they have given any license, or if they have developed any IPs, or they are using any IPs of foreign entity, these are all the points where the TP could be triggered, right? It's not definitive thing that यहाँ पे होगा ही होगा, लेकिन there could be TP. You have to understand that entire part, right? So there are certain questions also you can ask in client meetings. These are just illustrative list. I mean, for obviously, and also one of the more important thing, which I have seen that people don't have intercompany agreements only. Like if they have even they have transactions, TP transactions with the entity, they don't have intercompany agreements. Even for purchase sale also there are agreements, right? You have to document that entire arrangement. So intercompany loan guarantee arrangements, service agreements होना चाहिए in place which defines your terms and professional conduct, functional conduct, because you have to document it, right? You can show that during your TP proceedings. तो मैंने बहुत जगह पे ये भी देखा है कि intercompany agreements are not available. So we do also render that services to the client. So when we do advisory also, we tell them that if you want to make intercompany agreement also, we can help them. If even if not an advisory, if they come us that to prepare the agreement between two parties, out of which one is outside India and then both are related parties, we try to help them in drafting the agreement also, right? So that should be taken care properly, right? So these are the opportunities you can identify in your client base, right? Common mistakes which CA firms make on transfer pricing, right? Filing form 48 or form number 3CB, not form 48 is yet to be, the filing will start afterwards, but it is form 3CB. Please read it that way. Filing form 3CB without TP study report, right? Many times I have seen most of CAs just write, just file form 3CB and then they don't have TP report itself. Now, how will you justify that? How will you sign that? If you're signing that without TP report, you are violating, the entire norms. So you should not do that. Not checking all 26 A deeming conditions. Yeah, only they'll check capital. No other conditions like control, what we discussed, management, they won't check. Missing the STD thresholds, very common mistake. Most of clients, we, at least those who are in touch with me, they know that in their case when SDT comes up, they'll try to ask me that whether they should go for TP analysis or not. We do evaluate that also, right? Treating intercompany loans as routine, again, rate खुद ही decide कर लेंगे. Ideally it should be benchmark properly. When you are passing the loan, a benchmarking should be taken, but loan पहले decide हो जाता है and then after we do the benchmarking. Ignoring AP opportunity for stable transactions, very prominent, most common. Like, assuming UAE has the same rules as India, please don't do that. UAE में difference है. We have to do analysis in a UAE separate manner. India में हम separate तरीके से करते हैं. ठीक है? So that is how the common mistakes which I have seen being happen. Then we go to the next one. So day one is over. I'll take the Q&A में which are pending questions. But yeah, key takeaways. India IT is a renumbering exercise with targeted upgrades. Master the section. These are the key takeaways. You can read yourself. In meantime, I'll just take the Q&A part to ensure that we close on time. Yeah, Q&A. So guys, I hope the session was useful. You can put down your comments in the chat box. I can take screenshot and I can promote it, obviously, for the next set of sessions, so that it will technically help others also to join these particular sessions. Like, our intention there is that you should learn transfer pricing as soon as possible. There are many opportunities in India, UAE, Singapore. Singapore are developed jurisdictions, so we also don't target Singapore unless specific query if we can get from client on UK part. But there are opportunities in UAE, in TP. Why? Because it's an international tax provisions where almost every country would have the same fundamentals. Be it UAE, be it India, obviously the provision wise you'll have to check for thresholds, etc., reporting and etc. But TP, if it is applicable, the fundamentally you'll have to do assessment of TP applicability. You'll have to do the five methods analysis, and then after you you render the services. Most of countries would have TP, almost on the same OECD model or UN model. There are two, as I mentioned, UN TP manual in the chat box earlier, and the OECD TP manual earlier. As I mentioned, technically, TP fundamentals always remains the same, right? How you arrive at transfer pricing, how you advise client, it will always be the same. You will have to do the analysis, but obviously, no client analysis can be standardly used in other client. But still, you have the opportunities. If you agree to yourself, as I mentioned, it's your area of practice, right? If you understand technically all the things happening in TP, and obviously if you want our support, we are also there at back end. We can support you to, we do advisory more, We do benchmarking, we do compliance assistance, and we do also litigations as well. If you need any support on that part, we are there to help you out, and then probably you can serve to your client. We do this with many CA firms. So I'm not promoting my firm technically, but we do help CA firms so that they can get the TP work. Let market is much more bigger. It's not competitive. It's competitive market, but it's not saturated market. There is much more scope in transfer pricing. APIs have come in UAE right now. So API is also a very big area where people, you might be seeing many people are hiring for, UAE part. All right. So now I'll take the query. So just a second, Srinam, you have raised the hand, but let me just see the queries. First Q&A part में क्या है? Uh, ठीक है. How do we use RPM method practically? I think I have explained that. India is mainly back office, so we see that range is easily justified, unlike UAE, where most of office are not back office, so margins are diversified, even loss making. How are you dealing with those problematic? Those problematic, don't you think? Yes, obviously every case is problematic for us if we see that way. But see, first of all, tomorrow we'll be discussing how you do the functional analysis and how you justify the characterization. We in Not in UAE only, let me tell you, in India also, there was one of my client who had transactions around 200 crores. They have given loan, they have taken loan, they are paying interest, and they are also sending, exporting the goods. It's a minus 50% loss making company. You can understand, the level of loss is minus 50%. So we have justified that also, through a proper benchmarking, proper analysis. TP is not about justifying the markups. No, we are not here to justify the markups. We have to tell to the government that this is the economic position of the company. These are the factual aspects of the transaction, that is functional analysis. And this is how it is to be. This is how we are trying to justify the arm's length price. It's not always that we use markup and everything. We technically also do segmental. We segment the profit and loss account, and we try that if client has also dealt with the third parties in the same area, then obviously what are the margins which the client is earning, right? So in that manner also we do the analysis. So I cannot disclose much to you on this part, but yeah, you can do segmental analysis, and then also we have tried to justify the loss situation or low profit situations. But it will depend on case to case. Fundamentally, it will again. I'll put it up that way, that no, there cannot be standardization in TP, right? It will depend on case to case, that how you see the entire thing, how deep do dig deep, how you dig deep into the data which is available for analysis, and thereafter you will arrive at a proper conclusion. If client is, in UAE also it happens, in India also happens, and both the institutions, in client is, if seriously he's facing a problem in margins, obviously then we'll try to help him out in devising the entire profitability mechanism, that okay, how much should be charged by the Indian counterpart. That depends on functional analysis. You want to see one thing, tomorrow also I can show you this, but let me try to open one here, one thing, if it is possible, and if it if it is, I'm able to open this, because this PDF is too big to open. If you see here, in this case particularly, the client, I'm sure you guys are able to see the screen. There's a TP advisory deck which we have opened, which I have opened here. Are you guys able to see the screen? Yeah, okay, good. Thank you for confirming. Now, if you see the screen, this was a TP advisory. Obviously, I cannot show you the entire deck. We have an NDA with the client. We have tried to remove, many things from here. But yeah, so if you see here, this is the TP analysis which we have taken. So the client came to us with that particular problem only, that that group is not earning much more profitability. Yeah, and so these are basically UK based. This is a UK based group. If you see here the structure, the promoters and investors are based out of out of India. Then they have investment in this UK entity, and then UK entities has invested into the Indian entity. Now the Indian entity was our client, and they came up with a doubt that, Abhishek bhai, we are not able to earn the profits at UK level only. How can we pay a cost plus 18% or 15%? This was, some other CA suggested them that the Indian company should charge cost plus 15% to the UK entity. Now UK entity said that we are not earning only in UK. It's a startup, agri-tech startup it was, and it was not earning that much revenue, that they can pay 15% just as a part of tax cost in India. So that is the problem which we understood, and we helped them to understand. First of all, we understood that what is the value chain of this entire, where the both entities are playing role. If you see here, this is a presentation which I have made, where if you see, blue is basically controlled by the functions which UK entity is performing. Again, if you see the darker blue and lesser pink, that is UK and India involvement. If you see higher paying and lesser blue, they are India UK involvement, right? So somewhere I was trying to understand that what functions are being played by the Indian entity and UK entity, right? And what is their entire existing revenue flow mechanism, how the revenue is getting pulled up. Because obviously I need to understand facts first, right? Then after I'll do the analysis. I'll not just tell them that, okay, this is the markup, you go ahead with that. No, that is not how to be, that is not how it is to be done. So when you do TP exercise, though, now that is also defines your quality as a TP consultant. How well you are, posing yourself as a good TP consultant instead of only just doing the benchmarking part, right? If you see here, we have tried to understand the revenue mechanism, and then we have tried to understand that, okay, this is how they are earning the cash in the group, right? And that is how we have tried to tell them that, okay, what policy should be applied. So I'll just take you to the policy page, and also advising them that how they should structure their payments. This is how TP, for this particular deck, we have charged around 1.5 to 2 lakhs for this advisory. In UAE, we are also charging much more higher than that, like 3 lakh, 4 lakh, could be the fees for that. We need to understand economics, right? That's where we are all here, right? If you see here, I'm not just, I'm just taking you to the proper, I think, it takes a lot of time to open this deck. Yeah. So if you see here, we have tried to advise them that how they should structure the revenue part. Because India also was playing a major role when we do the analysis. We understood that India was also playing major role. UK was also playing major role. So India and UK both have to share profits or losses equally. So that is where we have tried to give them a policy, right? Obviously, whatever I'm explaining, it was a year or 1.5 or 2 years before. But this is the proposed policy, which wherein we told that not to go for cost plus method, go for other method or profit split as a cooperative, and then you try to justify the entire thing. So if you see here, this is how we are trying to justify in TP. Alright. I hope this clarifies. I'll just go back to the deck. Yeah. Yeah. Again, coming to the Q&A part. Where is Q&A? Yeah. So I hope that clarifies that not only profit. So you don't do only markup benchmarking. You need to understand the case, and appropriately you need to document everything. So now see, if this is all, if I wouldn't have documented all such things, tomorrow if government asks me, how will I go to, before the government and justify the same, right? It's only not only TP report. You have to go as a consultant to justify the things before the government authorities. How do you decide in TNMM whether to use OPA by OI or OP by OC? Yes, TNMM, there's a guidance for using PLI also. If you read OECD guidance, so under OECD, which prefers a PLI, the PLI denominator should not be controlled part. So, for example, if you are selling services to your AE, then your PLI should be OP by OC. Why? Because your sales is being controlled. That part is being controlled conceptually. So conceptually, we'll take OP by OC as a PLI. So the area which is not affected by your transaction, which is less influenced by your transaction, that is to be taken as a denominator in the PLI. And there are various means and methods to decide PLI. There are many types of PLI also. Like, Berry ratio is there. Then capital, I don't recollect exactly. Fixed asset to turnover ratio also people do judge at times in PLI. So we have dealt only in my lifetime, I have dealt with 1, 2 cases where we have used that as a PLI. Obviously, accepting or not accepting by officer is on the officer's hand, but we have used that PLI because that we thought that would justify more the situations for the client. Which database you used in UAE and what is the pricing for those database subscription? Yes, we can discuss afterwards also the pricing part. But yes, database in UAE, we prefer 3 databases. First is to do margin-based benchmarking. We do TP Catalyst. We don't go with SNP because that's a very, that database can be only used for US part. Like we only prefer US benchmarking in SNP. But for UAE, we will prefer TP Catalyst for margin-based benchmarking. The second database that we use for royalty benchmark is royalty stand and royalty range. The third database to benchmark loan transaction is LSEG loan connector along with S&P credit rating. So that is how we use the database in UAE. We'll discuss tomorrow also on databases, more. So yeah, now the query at India level, India level, TP assessment tested party is supposed to be taken to at India level. TP assessment tested party is supposed to be taken to be AUE. At UAE also TP is applicable. Any adjustment to the Indian TP? Is there any provision for which allow true up, true down adjustment at UAE level? It will depend on case to case basis. India, you cannot do a downward adjustment. If you have not filed return of income and if the books are open, still you can do downward adjustment. Let me guide you in that manner. We can discuss on UAE part afterwards, but first on India part, let me clarify. So when you are doing, so see, first of all, law with regards to selection of tested party, right? Now, tested party could be when you are, so there is no guidance for selecting of tested party in India or UAE regulations. There's a guidance, like, for selection of tested party, which is aligned to OECD's guidance. But India, there is no guidance specifically under the act for selecting of tested party, but there are rulings which have happened that where tested party can be foreign party. So that is first conceptually clear, right? In India also, you can have UAE as tested party. It's not necessary that the only Indian party should be tested party. That is conceptually correct, right? Now, that is on tested party. Now, when it comes to adjustment part, like, in case even you being UAE tested party or India tested party, even in you, if you're doing an adjustment, I would recommend to do a downward adjustment when you come to India. When you are closing the India books, do at that point of time downward adjustment. Don't do after your books have been finalized, because the problem is that if you do a downward, so I mean, there is no possibility of doing downward adjustments. I have not seen that cases. Probably people might be, other consultants might be doing that, a very technically thing. But then you cannot reduce the ALP pricing. So you cannot, I mean, it depends on transaction to transaction, but technically you cannot reduce the profits which you have booked into your financial statements. It is not recommended technically. And in India does not allows downward adjustment. So if you want to do a downward adjustment which aligns with your UAE position and UAE tested party, then try to solve that in the books of accounts of India only before closing the books of accounts. Don't do afterwards, because that will be that is not that is prohibited under the Indian laws. If you are increasing the income in India, then it is possible. Then you can obviously, after closing books, you can do, when you report that particular transfer price and arm's length price in your form 3CB, and in your return of income, you have to add that particular value of the adjustment when you increase the income. But you cannot decrease the income in India. It is prohibited under section 92. I'm not, it is under 92 subsection 3. It is prohibited. You cannot reduce the income in India. If you want to do that, do before closing the books of account, but not after closing books of account for that particular year. That is the best advice I can guide you, rather than much more debating into that part, because people have tried to find a legally solution for that, but there is no way for that, at least till now in India. Does interest-free loan from foreign shareholder tantamount to TP transaction? Why not? Yes, it's a transaction. As I mentioned that foreign shareholder has given you interest-free loan, you will have to document it. You'll have to justify that why interest is not being charged on that loan, right? There are certain arguments which are available where you are not charging, why you are not charging off for interest-free loan. Say, for example, it could be considered as a shareholder activity. And under shareholder activity, it is considered, shareholder activity is basically those activity which doesn't require any additional remuneration, right? So generally, when you are benchmarking from an Indian perspective, I would try to put in that argument in my Indian TP report, so that the risk also doesn't come on the shareholder for not charging of interest. So in India also, the assessees are treated differently. Like for Indian assessees are treated differently, and the overseas assessees are also different. That different assessee concept. So we have to ensure that we document properly the justifications for not charging of interest, so that it helps both of them to defend the position. Right. So now a question is also, what will happen that when range in India is 35 to 65, at UAE it is 25 to 75. What will happen in case range of UAE is attained but India level range is being missed for both side 10% gap? Again, see, when you are, so I'll tell you that when you see in India the range part, if that is being missed, then obviously you have to take the median. See, Indian regulation and UA regulation both are different. TP filings are different. They're not related to each other. That if you are comforting UAE, you cannot comfort India. I mean, you need to understand when you are filing. It's a very practical case. Like when it comes to a practical thing, we will have to take a position if your India margins are below the range. Like if you're talking about the range concept, and if your India margins are below the range, let us assume that you are going for a margin based benchmarking, right? When your margins are below the range, then obviously Indian provisions are there to assess the TP as per Indian law. They won't then refer to the UAE law. The technique could be that you can consider UAE as tested party, and then you can try to justify that, okay, this is the UAE part we have done, and then it falls under the Indian range of 35th to 65th. But then again, it should comply with the UAE Indian ranges. Now I'll explain you more on this part. Okay. So now let us assume a case, right? Again, TP may there is no standard approach. We have to see case to case thing, right? Now, let us assume a case where you are trying to justify transaction between the Indian company and its related party in यूएई. यूएई में आपने डॉक्यूमेंट प्रिपेयर किया, वो अपने रेंज में आ रहा है, 35 टू 65 रेंज में आ रहा है, ठीक है, आपका जो प्रॉफिटेबिलिटी है. नाउ व्हेन यू आर टेकिंग दैट पर्टिकुलर पार्टी एज अ टेस्टेड पार्टी, आपका ज्योग्राफी भी वही होना चाहिए कंपेरेबल्स का. इट इज रिकमेंडेड कि कंपेरेबल का ज्योग्राफी भी ऑलमोस्ट सेम इकोनॉमी को पर्टेन करना चाहिए. इफ यू आर टेकिंग दैट एंटायर कंपेरेबल डेटा सेट एंड इफ इन इंडिया 35 टू 65 आपका नहीं आ रहा है, then in India you will have to make an adjustment on that particular transaction. If you have done a sale transaction, if you have done an import transaction, whatever transaction you have done, तो आपको उस हिसाब से आपको एडजस्टमेंट करना पड़ेगा. लेकिन when it comes to India, you will have to comply with 35 to 65 परसेंटाइल रेंज कॉन्सेप्ट. अगर उसमें वो नहीं बैठ रहा है तो आपको एडजस्टमेंट इंडिया में करना पड़ेगा. देन यू कैन ऑब्वियसली फाइल अ मैप केस हियर. यहाँ पे आप मैप कर सकते हो, या फिर you can file an APA to ensure. So there is a concept of bilateral APA or unilateral APA also. In case if you are dealing with both the jurisdictions, you can go for an APA, bilateral APA, where you do the APA with both the authorities or APA with Indian authorities to ensure कि sir ये मेरा problem है and this is how we want to position ourselves. Then take the authorities view that way, right? So in India, when you are doing benchmarking in India and you are documenting for India taxpayer, ensure your 65th and 35th का जो range concept है वो follow हो. वो नहीं होगा तो you'll have to do the adjustment. हाँ, now it depends if you are benchmarking a PLI, margin based benchmarking कर रहे हो, आपका PLI ज्यादा है इंडिया में, which is going beyond 35th or 65th. Generally in India we consider that as at arm's length. Correct? I hope this clarifies. इट विल ऑल अगेन डिपेंड ऑन द प्रैक्टिकल थिंग्स. आप जैसे केस मेरे सामने लाते हो, क्या मैकेनिक्स बनते हैं उस केस के, तब जाके अपने को समझेगा कि इंडिया में. फॉर एग्जांपल आई गिव यू आल्सो वन मोर एग्जांपल. यूएई में व्हेन इट कम्स टू डेटाबेस यूजेज, जो है ना टीपी कैटालिस्ट में जो डेटाबेस हम यूज करते हैं उसके अंदर फाइनेंशियल्स रहते हैं, लेकिन फाइनेंशियल्स में बहुत सारी इंफॉर्मेशन नहीं रहती है टीपी कैटालिस्ट के जो फाइनेंशियल्स रहते हैं उसके अंदर. वेल इन इंडिया व्हेन वी डू बेंचमार्किंग कंसीडरिंग इंडियन पार्टी एज अ टेस्टेड पार्टी, you have the financials which are available on MCA which has detailed notes to accounts, right? तो वहां से भी कुछ एडजस्टमेंट होते हैं. एंड देन आफ्टर यू शुड सी दैट ओके वेदर इट इज देन फॉलोइंग अंडर 35 और नॉट, वेदर योर मार्जिन्स आर फेवरिंग यू और नॉट. सो दैट इज हाउ यू हैव टू सी. सो अगेन आई विल टेल द सेम पॉइंट, इट विल डिपेंड ऑन केस टू केस, क्या फैक्ट्स है, क्या आपका टेस्टेड पार्टी का मार्जिन कैसे इंडिया में कंप्यूट करना है हमको, एंड देन आफ्टर वी कैन क्लोज ऑन द केस, राइट? इफ यू हैव अ जेन्युइन केस वी कैन डिस्कस. इफ दिस इज जस्ट अ टेक्निकल थिंग व्हिच यू आर आस्किंग, आई स्टिक टू द पॉइंट दैट इंडिया में इंडिया का फॉलो करो, यूए में यूए का फॉलो करो, राइट? राकेश गुलाटी, रेडीमेड गारमेंट इंडस्ट्री क्या सर, बट उसका मैं क्या बोलूं. ठीक है. मतलब रेडीमेड गारमेंट इंडस्ट्री में व्हाट एग्जैक्टली यू विश टू नो. आई मीन यू कैन ऑब्वियसली पुट डाउन अ क्वेश्चन सो दैट आई कैन आंसर इट वेल टू यू. Rahul ji is asking, we have a client who don't have any employees in India, okay, for now, but for running the running expenses like rent, professional fees, other related expenses, how should we deal it? How to raise invoice to cover above expenses? Which type of documentation? Rahul ji, we can discuss that this afterwards, because I'll have to understand that आपका client कौन सा business कर रहा है first of all, right? What business he is into? What is the objective of him placing that entity in the India, what value Indian entity is creating in the entire value chain, and then appropriately we can devise a model for that. Remuneration model बोलते हैं हम उसको, कि आपको cost plus पे जाना चाहिए या फिर what exactly the things are happening where a client is residing, client in the sense client's management, right? So at that point of time, I'll be able to guide you that what should be the proper approach, right? Does US have similar PRP provision to that of India? So for US, no, they don't have similar provisions as of that of India. Foundations are same, fundamentals are same. But when it comes to provisions and methodologies, they follow UNTP manual. UNTP and US के लिए there are many more methods. Like they are not restricted to 5 methods as far as I know. We don't deal in US much right now. But yeah, US has I think around 7 to 8 or 9 methods. At that again, they have categorized the same. So conceptually, you will be able to understand the methods if you know this Indian 5 methods also. So you'll have to study the US TP provisions separately. But yeah, most of concepts could be same. Foundations would be same. Conceptually, it will be same. But then provisions you'll have to study. I mean, that could be different from the Indian ones. How to approach a combined TP study when there is an entity Indian and A in UAE? There is no concept of combined TP study. You have to comply with the Indian TP regulations and do the compliances in India accordingly, and you do the compliance in UAE also accordingly. You can get a single quote from a single TP consultant like us. to help you in India, to help your Indian client also and help your UAE client also. But there is no single or combined TP study. FAR could be same. Obviously, when we are doing TP study, your functional write-up can be same. We'll see tomorrow, how you draft functional profile. That should not be conflicted with each other. That is the first foremost thing. But when it comes to compliance and maintaining documentation, obviously there should be two documents separately maintained. And justification, again, how you justify in the Indian part and UAE part, that could be same also, that could be different also. But at least when it comes to Indian counterpart or in UAE counterpart, you have to align to the regulations which are there, in a particular jurisdiction. Tested party at UAE and I am in range of UAE but not of India range, then is the TP downward adjustment permissible at UAE end? See, UAE provides for TP downward adjustment. Let me tell you, UAE law provide karta hai. Last year we had a case where we wanted to do the same thing. Like in one entity, the profit was rising. The other entity, we had to decrease the profit to meet align the arm's length range. प्रॉब्लम क्या हुआ व्हेन वी वेंट टू द यूएई's एफटीए's वेबसाइट एमआरआ पोर्टल है उनका यूएई में व्हेन यू वेंट दैट देयर इज नो मैकेनिज्म स्टिल इनेक्टेड फॉर डाउनवर्ड एडजस्टमेंट वो बोल तो रहे हैं कि डाउनवर्ड एडजस्टमेंट करवाने के पॉसिबल हो सकता है बट देन वी हैव टू गो विद द अथॉरिटीज एंड आस्क फॉर देम फॉर डूइंग द डाउनवर्ड एडजस्टमेंट देयर इज नो ऑनलाइन मैकेनिज्म अवेलेबल एंड दे विल आई थिंक दे विल इंट्रोड्यूस दैट मैकेनिज्म बट नॉट नाउ एट दिस पॉइंट ऑफ टाइम उन्होंने अभी इंट्रोड्यूस नहीं किया है probably in this year they may introduce the mechanism so that where people can file for downward adjustment but at least UAE government appreciates downward adjustment. They don't deny downward adjustment just like India may they don't appreciate downward adjustment. They will not try to reduce our income. They will try to get more income and taxes on that same. Unlike UAE actually appreciates downward adjustment. वो बोल रहे हैं कि आप TP में रहो and if you are required to do downward adjustment you do that. That is what they maximum I can say to you at this point of time. I hope that clarifies. Which domestic transaction are considered TP in UAE? So, which domestic is something, domestic transactions are domestic transactions. Yes, but when you pay dividend if UAE company is paying dividends to the shareholder, that is excluded as of now, the domestic shareholder, वो exclude करते हैं TP में, वो तो इंडिया में भी हम exclude करते हैं. Dividends generally we exclude from TP analysis. Dividend का transaction हो गया, that we try to exclude or the post tax transaction like post or reserves में से आप allocate कर रहे हो, issuing of bonus shares है, because that are done from reserves, right? So that we do exclude when we do benchmarking. Else other transactions we try to include in TP and to do the TP analysis. Yeah. I think I have resolved all 2025. Okay, one more query. Do authorities challenge the most appropriate method? मतलब क्या है इसका? Yes, they can challenge, obviously. They can challenge your FAR, they can challenge your methodology, they can challenge your benchmarking, everything they can challenge. So they can challenge. If you have done cup analysis, but authority says that no, you should go for TNMM, you can challenge that, obviously. They have the right to challenge. Yeah. Any other questions? I like the session. I was actually we have you have asked many questions. That's a very good thing. Like I love to give responses on this part. That is how we'll all learn, right? How to. There are certain open areas in UAE when it comes to UAE. There are many open areas compared to India. So UAE still the TP is evolving. The law is evolving. Is what we say to the client also. Yeah. So I think so in that case, an abundant caution, we need to compute TP under all methods. No, you don't need to compute TP under all methods. There's a mechanism to be followed. So once you start practicing TP, once you see 2, 3, 4 TP reports, you'll come to know that how should be the approach to in transfer pricing. Yeah. International job opportunities. Yes, there could be. I cannot comment much on this part because, opportunities are there in every sector. It depends on your skill set, what you know, and what it all depends on your skill set, where you wish to go, in which area you wish to go ahead. But there are opportunities at international level in TP also, non-TP areas also. Depends on skill set. In TP also, I've seen people so few of my friends who were there with me in EY India or SKP also, they have shifted to Dubai, they have shifted to Abu Dhabi, they have shifted to Netherlands in transfer pricing. So yeah, any practical working opportunities like internship with us? Yeah, there is no internship opportunity right now with us. So we are right now, our team is fully working, and we don't have any openings right now. But yeah, you can see for other TP firms, they are there. There are any opportunities. There are many TP firms in India, UAE, who may require, intern support. But generally, I use, we have read, so we are very smart. So what my concept of, TP practice is that in my team there are only two chartered accountants. They have 1 year of experience, and they handle all the execution part when it comes to international tax TP advisory. And we have two interns. So this is our. I personally believe in smart and lean team because there are AIs in TP. Like, for benchmarking we use AI. Obviously, when it comes to UAE, we outsource the benchmarking only. We don't focus on benchmarking when it comes to UAE. Obviously, we ensure that the benchmarking quality is being maintained and then we deliver to the client. But how we have done in our practice is that I have automated proposal drafting. I have automated a functional questionnaire. Let me show you functional questionnaire part. Like, if you want to see, I am working on certain automations in TP. So I've automated the entire functional questionnaire part. This is something which I am disclosing for the first time before the public. This is also not being disclosed to the team because I'm working on it right now. But I'm using Claude. If you guys use Claude, if you see here, yeah, let me just share the screen. Okay, if you guys are able to see this particular window, yeah. TP questionnaire generator. This I have built basis my exposure, practice, etc., which can generate the functional questions. So, for example, if my client is into say automotive industry, right, and he is into say automotive industry, mein, they are into trading, say trading automotive, right? Here I have selected this thing, so I'll get all the questions below only what I should ask to the client. So there are 32 sections, 85 questions which I can ask to the client. If I put a client name here, say for example, ABC client name, and if I just add the party name, and I am able to, now this is at a, right now the mode which is, right, the under development mode. But if you see here, all this question will then I will get in a proper document format, which I can directly send to the client, which was previously a manual work. So if you see here, part A trading automotive, AI itself has built the entire questions around it. All right. Interesting. Who's doing R&D, and then who's doing raw material, who's sourcing raw material, finished goods, then loan royalty, is there any royalty or FR functions related questions है, risk related questions है, commercial terms है, distribution agreement है कि नहीं है, डे टू डे एडमिनिस्ट्रेशन कॉस्ट है, वर्किंग कैपिटल भी होगा शायद, देयर वुड बी सर्टेन क्वेश्चंस रिलेटेड टू वर्किंग कैपिटल एज वेल. Storage, warehousing, all type of questions are covered when it comes to trading of automotive. you know so yeah, this is how. Then benchmarking manager remuneration, वो भी शायद इसमें we have covered. I'm not sure. Financial, IP licensing, other. I think that was also one of the thing covered. I think मेरे ध्यान में नहीं आ रहा है वो चीज़, लेकिन वो covered भी हो चुका है, वो भी है. Manager remuneration, right? That is how we are trying to develop. So this once will develop, obviously, I think we will be able to launch it, right? Yeah. So this is what from my end. Yeah. So guys, I think any other thing you want to ask in Q&A section, or should we close the session? I hope you guys have liked the session. I'll be opening the WhatsApp group in case if you are there on WhatsApp group. The link is already there on your mail. You can join that WhatsApp group. Let us learn all together. Let us, be TP experts. That is what my intention is. That, and if you want any help, I'm there in TP. Tomorrow we'll meet. Day two, we'll be discussing certain. I think tomorrow, for day two. Okay, so day two tomorrow, what we are going to discuss is documentation, benchmarking, AI in TP. I'm going to, also discuss on AI, and case studies are there, APA safe harbor, and how do we deliver the